hitting some news right now. Nothing really moving though. How is this going? Up. Okay. Oh, because of CEO change, you think? That might be it. Nothing really moved. We'll see. I'm with you. I bought that dip, baby. I bought that dip. I hope it goes lower. Son of a bitch. It's oils. Oh, jeez. This HE just looks so prime. Yibo on watch today, 485 daily cock. NUWE Daily Cock would be 3 break. MHUA. See, what I don't like here is we broke high day and it just sold off. Yeah, not surprising. Did the exact same thing. Oh, Discord, thank you. I forgot. There we go. Go to 11. Jeez. Yeah, we'll do that for sure. Freak. Look at this FFIE. Hmm. I don't know what. Maybe I want to flip over to this, but Pinterest. Jeez. Nothing, huh? Gator kept banning your chats. Am I? Oh. What happened to this thing? The hell is moving this thing? Tell me that doesn't look juicy. And right back down. Okay. Trying again. How do you move like this and then go low of day? Explain that one to me. There we go. Oh, I'm gonna have a breakout day today. I wonder if we're gonna see much today with Fed rate decision later on. this is a little better. Well, it smacked it right on its head. That's a big buyer. $9.78. That's if it breaks 154, you could do something. It's not selling off like the last few times it's gone high day. Gonna do it. No, guess not. It's trying. Watch the 52 break. Ah, failed cock now. It's close, but no cigar. Oh well, probably just better to wait for 8 o'clock. Jeez, he's on vacation. He takes like a 2.5 month vacation. Nick should be back today or tomorrow, I think. ACHV breakthrough. Yuck. It's been earning. All right, this is starting to break that diagonal. Missed it. Jeez, this thing's thick. Enox. No. First cup of coffee for the year. Okay. What's up, Jimmy John? Jeez. So reads. Damn, MHUA. I hit $2 there. That diagonal resistance break was the kicker. At 220, then 250. What's up? Swing to the bank. Wow. Where is this up volume coming from? Solwick. Damn, there's nothing moving besides this piece of garbage. Yeah, and the spreads on Boeing, Jimmy, is ass. Damn. I keep sneak streaming? What are you talking about, Savage? I have streamed Monday, Tuesday, and now Wednesday the same time I always stream. If you put the notification bell on, you know when I stream. I didn't stream all last week. Nobody's panties should be in a a tuffle here. Oh my gosh, Savage. I don't know why it's the only thing moving, so it has that going for it. This is chat rooms pumping this thing. Watching this PETA here for the sixth attempt again. Maybe over 581. It's doing a little 15-second cuck that's doing nothing. I want to see the bid walk up. And there's a little bit more of a push. Morning, brother. Morning, brother. Just being patient with it. I feel like I should take this. It's cuck and go. Watch the 5-minute. Beat break 81. See if we get any 30 news in about 5 minutes. have to wait for 8:30. I'm at cock now. Right off MHUA, right off the 9 EMA on the 5. Front page. Not today, you're next. All right, let's see if we get a 8:30 news headline here. GMM. Nvidia video headline. What's that 130? What does it say? Spotted by Nvidia China to engage with industry leaders at SIG whatever. The 130 is the level. Fortunately, that's close to where I'm entered in at. For 20, I'll add. Should have gone. Going the wrong way. We were at now. Oh yeah, dollar. I think that GMM could still go. It's got buzzwords in it. The news is kind of bullshit, but LPTH achieves key qualification milestone with Lockheed Martin for U.S. Army missile program. Hmm. Nothing. 8:30. Nothing. GNL Phoenix. So the price I entered, and so I have to use limit orders pre-market. So this is the price I enter in at, just because I'm trying to hit the ask. Is I'm trying to hit the ask and giving myself a little cushion above that. And this is the price that filled me at. So you wanted 130, but we got it to you at 123. And same on the sell. The only way I can sell is if I hit the bid. So I have to put my order below the bid to get filled. Why didn't that fill? Why didn't that fill? Oh, yeah. Hello. How are you doing? Get that MACD to flip. We might have something. You got a couple levels here that if you break, it can get kind of crazy. We'll see though. 5 minutes not the best. Maybe it needs one more pullback. Did you really KU? Jeez. I didn't even know they had calls. The Bollinger Bands are getting pretty tight here. And there's volume, so I expect a move. And it might be down. We'll see. Nothing with that thing. Six rand. PCSA. Damn, that's a lot of calls. Give it all back. So there's literally nothing moving. TRST. You know, it's bad when we're looking at 5-cent stocks. Jeez. Tiva. It's just not moving. Good entry there. The salty stock skipper. All right, I'm gonna go body. There's nothing moving. anything moving? Dave's hot chicken. Ah, jeez. I'm red, right? Oh, $1. There's not enough trade. Well, get these spikes, doesn't it? Where did this come from? It's hot chicken. Look at that GMM now pushing low a day. Oh, talk politics? No. What a shit show, though, huh? I mean, in the last month, we've had Trump getting shot, Biden in a 48-hour period. We've heard he's not going anywhere. He's dropping out. He's not going anywhere. He's dropping out. He's not going anywhere. He's dropping out. So then he drops out. Then the only time we see him, he grew a foot. Now Kamala is potentially the representative. Now, what if they go and oh, here we go. We got a juicer. Ooh, jeez. What if we get there and the delegates are like, nah, we don't want Kamala. There we go. Bullshit. Clear this for. No, too much selling here. It's got to get over this 420 level. It's holding up here nicely. A lot of selling at 4. Oh, jeez. Oh, jeez. All right, let me get out the rest of that. Guess we're green. $39. What? How am I only green $39? Has it not updated? That by itself is like, hello. What's up with Para? It must be. sure. Holy dung. What's the news on Para?
Alpha, PARA.
Thank God Chuck's back. I don't know who the imposters were yesterday. All right, well, this is off the list. Freaking round trip. Talk of a competing bid by Apex Capital and Para. Okay. How does this thing? That's off the list. There's nothing. How? I mean, this bounce. Jeez. Why do stocks get halted? Well, a lot of times they can get halted for news. If the company wants to halt the stock because there's some breaking news and they want that out without the stock moving, they can do that. The other times during market hours, they can halt if they move too fast. It's called a circuit breaker halt, and it will halt the stock for 5 minutes. There's a whole formula that goes into that, but in essence, if it hits the halt level, the stock stops moving for 5 minutes and then it will reopen. This has a chance here, boys. What is this thing? How does a stock do that? Jeez. What was the news on it? Lakeside enters leading e-commerce platform. Just a 2-point diagonal right now. It's not much to lean on, but maybe it gives us something. Cock would be 46. There it goes. It's just a 2-point wedge. I wouldn't even put much on it, but it could do something. Very small size. And the selling, look at that. Under 380 would be bad. It's the third attempt to get over this 4 and hold. Yeah. Oh, the buyers came back. We're trying. LSH. A lot of volume here. This is 401. This is 94 now. Not holding. Just can't hold. Jeez, I can't make a buck on this trade here. I mean, it's real close to going apeshit, but oof, jeez. ISPO. That's yesterday's mover. Oh yeah. That's a diagonal break. A lot of volume here. It's a weird price action. Let's say it's going for that 4 again. It's pretty thin, but selling needs to freaking stop. Yeah, I've got NUZE on my list. Don't like this, and I gave it all back. But you are kind of on a support level here, so we'll see. That's a $4 hold right there. Hold. This might do it. It's a little bit of a different look here. It's another retest of 4. If it can hold 4, you got it. If not, big bids coming in. Why is this level so damn hard? Back to 4. $4.20 break again is a must. It's trying to hold the 4. So much volume. Oh my gosh. $4.20 now. Gosh, so difficult. 1 minute cock would be 23. You'd have to go here. How does that not go? How does that not go? The bid's starting to work into a... This is so tight here. Small size, because I don't know if this is going to hold. It looks like it's... Yeah? No? 425's got to hold. Spreads. Jeez. 15-cent spread there for a second. All right. Five-minute break. Can't 5-minute break. I have freaking shares open. All right. Oh boy. I don't trust this LSH. It's going to do one of two things. Absolutely go moonshot out of the open or just crater into the abyss. And I don't know which one. And I don't have a cushion on the day to play it. I'm red like $150. Yeah. Plus this. It ain't looking so hot right now for me. I do like this one though. Over 830. It's diagonal here, or 835 really. Oh yeah, keep going, baby. Keep going. 15 seconds to the open. E-Turd's ass in the first minute. So if this goes nuclear and I can't sell, I'm going to flip my lid. I'm going to start recording just in case. Let's see if E-Turd wants to dick me. Hit 50. LSH dump. Who's this asshole? We gotta get over 58. Get over 50. All right, take the L. Let things settle in. See what happens here. P to pop and drop. Jeez. Serve. Nice initial move here. Just kind of loading up the old watch list right now. Shut up, Chicka Bow Wow. Found a video of me using E-Trade. What is this? Oh, jeez. Damn it. Spreads and Boeing are ass. Oh, hello. Did this just break the diagonal? Why is it so spready? Seems like a red green in the making here. Golly. I can't even exit. It's moving so quick. Holy jeez. Mother of God, look at that. NVIDIA hit 114? That would have been my exit if I was paying attention. DALN. Okay, this is halting. QXO from yesterday has a 1250 level already. 1252, 1260. These kind of flat top levels from yesterday played really well when they went. ISPO moving back up. Kind of spready. How many is that? 5, 1, 2, 10. Damn it. Okay. Serve maybe. PETA. Yeah, PETA's got something. Good W here. Over 539. There it goes. LSH, dip and rip. Seen it before. Serve went. There was a W there. Missed that one. QXO. So these flat tops yesterday, they were gold. Whenever we saw this, I put orders on the back side of it, just like I'm doing down here. And if it breaks, it usually gets a nice pop. All right, so I'm filled 2,000 shares here. This isn't how it acted yesterday. Oop. Needs to go. This is a little different than how it acted yesterday. Give it a second, but nice move on NUZE. Big buyer. So here's another level. But if this clears, you have room to 1270. Not a huge fan that we have another, we moved 5 cents off of a flat top here. It's not how it acted yesterday. Big buys. Watch them reload the 50. Yep, see them reload it. This is how it happened. Worked all day yesterday. Big vol. Geez, 60,000 shares. Couldn't break it. Now you're pushing 1250. Oh, for crying out loud. All right, I'll take. Oh, did I get a good exit? Okay, good exit. Thank God. NUZE. About 40 seconds on this. 642? Oh no. 675. So it's a slight dip here. NVIDIA coming back up, huh? Missed it. Oh, jeez. Third chance? Nope. Jeez, man. Fourth chance. Here it. It's gotta go. It's gotta go. Serve 1 minute. Or 16. $17. A lot of volume on serve. ISPO dump. And BFI. Wow. Wild action today. Serve is getting destroyed. Keep back. Boeing, ISPO, dumpy off the list, NUZE. Still holding 7 right now. It's a nice little hammer it's building. Groupon trying to move. What's up, Time Taker? Apple. Nice, decent daily there. Trying to get over the 9 EMA. Serve high day. Shit, missed that one. So thick on NUZE. NUZE try. CRWD, I like the 5 minute that it's building out. Could go either way. So that'll be on watch. 780 on NUZE now. Finally opened up. $8. Jeez. Uber Lyft news. New York City won't impose new whatevers. It's really nice news. This should do well. Really. Now hold up. Gotta let it go. D. Five-minute cuck. If this bounces. Serve has a W. $35.20. That's what you're gonna do, aren't you? Price compression, 5-minute cock. Right into a 5-minute cock, right? That's what you're gonna do to me? Sure looks like it. NUZE, nasty move. Halted down. Wow. Were you short salty stock? If so, congrats. I mean, look at that move. That is nasty. MLGO moving. There's just not much. There's not much today. LSH 5-minute cock. This guy's still on watch. That's 350 or 1255 level. If it comes back up, I'll put orders above it. It's not holding up just yet, but ATOM in the scanners. Gosh, it's complete ass today. I don't even know what to put here. Video, maybe. Stopped out of my CrowdStrike. Failed cuck. Now you're cocking. Yep. There's nothing. Pinterest getting wrecked. Wow. What's the Mentor Q levels on NVIDIA? Sure, we are not getting too crazy here. Oh yeah, some levels at 115.50. Can't remember what HVL is. Buzz, do you know what HVL is? Can't remember. Zap Daily Cock. Hey, look at that. Did I catch a small bounce? Not there. Jeez. NVIDIA. Serve trying to come back up. Really nice bounce on it. She's on vacation. Probably be back mid-August. I don't think I can short Pinterest, can I? Nope. Man, the way things are moving right now, I don't even want to trade today. Yuck. Apple 2250. Does look nice. I would hold it at $6. The hell is this thing? Jeez. Was there news on NCNC, or is it just going stupid to go stupid? Good God. You're short NVIDIA? You're crazy, Chuck. I like it. See you, Chicka Bow Wow. This might be one of those days where it's like come back at 2 o'clock for rate decision. Just don't do anything till then. Yeah, that was a nasty candle on NVIDIA. An NUZE? It could. Especially over 672. I never roll out these like high flyers until it's just absolute, you know. Yeah, she's done kind of talk. Nothing I'm watching is showing any momentum. AMC. Not a ton of volume. But yeah, the daily is kind of winding up. I need a little bit more time. But LSH, don't even write it off, man. I mean, it's still here. I know what can kill the boredom. Here, I got something for you. If you haven't heard this rap song from some Indian guy, well, shoot, I'm about to blow your mind. I haven't played this already. I haven't played this already. Yeah, we're going to play this right now and you're going to like it, all right? If you haven't watched this, this could be the best rap song out there right now. It's not saying a lot. Yeah, the big stepper.
The stunts in this movie. Hey, shut the fuck.
Cover my Pinterest because it decided to dip and rip as I was about to go low a day. The beginning. I love the beginning. You can go watch the rest if you want to. It's called Humankind. Or no, it's the band Humankind and the song's Big Dogs. I don't know. I think the song is Big Dogs and the band or rap group, whatever you want to call them, is Humankind. Yeah. Love it. I mean, we're getting all these little pops from all these garbage stocks. What's this? NVAX. Trying to move. See you disputed. Yeah, hustle. I've been watching that CRWD. I want to short it, but I'm not against taking it long either. Nvidia short thoughts? Well, I mean, I think you got pretty strong support down here at 13, whatever. Well, hang on. One of my stocks, daily cock now in this NUWE. I don't know if it does anything. Oh, some buyers there. Jeez. VIX is getting crushed. Maybe it is large cap day.
NCLH, Norwegian Cruise Line executive, said entire increase in our guidance is on the back of stronger pricing. That's NCLH.
CrowdStrike trying to go. And UWE still moving. Video again. That Apple play was brilliant, J. Jill. You have a failed cock? I'm talking about 5 minute. So we're back down. Uber left. Grinding to high day. Not left. That might be a laggard there. CRWD. a tough one to draw. Play it safe. What's all these stocks today moving up that have the same kind of look, just absolute flush out, and then the next day is right back up? NUWE still moving. Serve getting nuked. No leak. There's no leak for sure. RENB circuit breaker halt? Wow. Okay. It's like an 87 million share float. Great. Yep. I gotta step out of my Pinterest. Man, nothing is working for me. How many times do I have to click the button? Freaking sell. NUWE back up. Well, I'm very red today, like $800 or $900. I am not doing very well at all. Okay, this got serious real quick. This high here is 378. So if I'm in a cuck, we play the 340 break. double bottom SPY. Golly, look at that market move. Jeez. This is a 30-minute of the ES, but maybe we're outside the Bollinger Bands. That just doesn't happen. Pretty crazy. Hey, would you look at that? Pinterest right back down to the lows as soon as I exit! Trying. Jeez. How did I get filled? Over the ask. That's a new one. That's fan-damn-tastic. You know what I mean? Nothing like getting filled. There was a wall at 340, and I get filled 3 cents over it. Wow. Bullshit fills. Look at that. How am I? It's 200. Oh my gosh. And then somebody comes in with a bazillion shares. Rumored, Blazing. Rumored. LSH. It's real interesting over VWAP, but not really until then. Hollow. Whoever called that out. Getting a little love there. I'll tell you what, this NUZE 5-minute cucks not doing much. Watch that 5-minute cock, might get a move back up to VWAP. $34. Is it Scout? Wait, 34. Holy jeez. Spreads much? Okay. 20-cent spread out of nowhere. Cool. LSH. It's another 5-minute cuck. It should go. Still fighting here though. I think you're right, Jimmy John. Video's nice. Is nice. Well, that didn't hold up. That's a potential short. I don't think I could short this. I don't even try most of the time because I know I can't get shares. 705% hard to borrow rate. Oh. Okay. Imagine waiting for it. Yeah, that's what I was saying yesterday. That's what I was saying yesterday on NVIDIA, is everybody was looking at this and wanting that gap to fill. Everyone mentioned it, which means it's not going to get there. More of the times than not. And we didn't. CRWD, really like the chart. I'm just trying to be patient with it. You got squeeze indicator glowing yellow. Don't know which way it wants to go. Just trying to be patient. So when it goes to an ad, does Twitch subtract those unsub viewers? I don't think so, Cater, because yeah, I don't think so. A lot of times we'll get influxes as other streamers like go potty, like I do, and then come back, something like that. If Stocky signs off, we get an influx. But good question. I actually don't know, but I'm just kind of assuming Pinterest loading. That's fantastic. Yeah, we'll do JPal Bingo later on today, 2 o'clock. Be ready for it. We'll set up our bingo cards probably around 1 o'clock. Should be fun. And there's Pinterest loading. Are you going to rate cut? My guess is no. But I think everybody's going to be on board for a September rate cut. You know, right before elections. I think that's what they're setting us up for. This thing is wound up. 95 chance cut in September. Yeah, if there's a, so that's what's priced in, right? If there's a different tone to an announcement, that would be something. That would be something. That's what the market's not prepared for. My brainers at 5 head. Who am I voting for? You think I would ever disclose any I try to stay dead center. It's much easier this time around because, well, let's be real. Both candidates are freaking clowns right now. But anyway, I try to stay dead center because I don't want to piss off half my audience. I'm an entertainer, baby. I'm an entertainer. I'm not like trying to piss off my half my audience and then they all leave. No. I'd rather make fun of both sides, which is easy to do. Red shirt and blue in the background. Damn right. There you go. What about the couch? New additional death. I see that in UWE. 5-minute cock. Shut up, Big Dave. Got a dust bunny pregnant? What? Oh, man. Presidents are temporary. Wu-Tang is forever. Up against it here. Not breaking down, really. Getting extended. Bullshit Phil. As soon as I hit the buy button, 40-cent spread on those options. Let's see what happens here. How come I can't get that previous candle? There we go. I know it's chat. Ethnicity people. She was what? What I find funny about Kamala is like she was hated by pretty much everybody, left and right, and then in one day, boom. She's the motherfucking savior, man. Oh! And you know what? Look at Pinterest! Ah! Ka! Ooh, Billy. Give us that poppy, baby. NUWE. Oh, look at that VWAP break. That was nice. It's not put, it's calls. Whoa, where did that volume come from? That is not on the tape. Do you guys have that volume bar? So it's calls because the price of the stock is $235. And I don't want to have basically all my buying power locked up into this thing. So I'm buying a support, hopefully, with only $500, $600, whatever. If I'm right, it'll be a nice leverage play. If I'm wrong, whatever. But I don't have my entire account sitting in the stock in case something else moves and I can play that something else. That's the main reason why I'm doing calls here. LSH is still hanging in there. Cock. I don't know. Maybe it's a diagonal break. Oops. It is starting to push a little lower here. Little lower here. You know, SJ went long on a support. You know what that means. Time to break it. I see the NUWE. If I play that, you know it's going to dump. Be sure you know what you're asking for. I cannot believe that this is the time it chose to dump for the breakdown. Actually, I can't believe it. I can't. Yeah, I gotta get out. Good fill. Now that I'm out, if it completely... Jeez. Cash burn be larger than the previous forecast? Didn't they already increase the cash burn this year? Awesome. Just in time for a bounce. I can't win today, man. I freaking can't win. Go long, finally breaks. Short Boeing news, bounces. This is just absolute trash. LSH, what is this? 335. What you gonna do here? It's another cuck and go set up on the 5 minute. No, E-Trade's not showing it. But this did cuck with the diagonal. 3-point diagonal now. We might get a pop here. 335 breaks, I'll add. Come on, let's see a big bid. Big bid. MACD's up. Stokes is up. 5 minutes is flipped. Let's do it. Come on. Let's do what NUWE is doing right now. Look at that move. Jeez. Whoa, NUWE. Whoa. Damn, dude. It's lightening up. Didn't break out. It's still holding. I mean, 330 is the level it needs to hold. But we're... Watch QXO. Flipping over to that. That got interesting. Still needs to get over the 50 level. Damn, dude. Damn, dude. What's your opinion on a point on stock transactions? That's stupid. That's what I think. Why would we tax a transaction like that? It's just dumb. How about we stop with the taxing bullshit and reel in our spending? Let's just start cutting some shit. Let's start there. I cannot believe Pinterest is at 32. We are $35 trillion in debt. We're running a $2 trillion a year deficit. That's what, like 100? What was the stat? $107,000 per person in America. That's crazy. You have a 0.3%. How do you even trade that? Oh my gosh. That's crazy. Interest payment on debt is higher than the entire military budget. Holy jeez. Nvidia is getting frisky here, boys. Nice little wedge. Trump advance will stop spending. Probably not. None of them will. Because that means you won't get elected. Because cutting spending means fund money coupons aren't going out to different agendas. And the powers that be need money. They need it. If you're not going to give them the money, then you're worthless to them. And it will hurt, right? All of a sudden, you're not getting your $8,000 tax credit on your EV, or you're not getting your, I don't know, whatever the hell it is. People are like, well, but I want it. I want it. Gimme, gimme. Quick war. No, this is what we got to do. Five-head thinking here. Who do we have? Who owns most of our bonds? Okay, China. Simple, right? We go and we just conquer them. Boom. Debt erased. Done. Or, yes, I like where you're going, Soils. We invade Canada. We take them over in about 5 seconds. And then we sell them to the highest bidder. Surely we can get a couple trillion out of Canada. Sell Quebec. Nobody wants Quebec. That we would have to just write that one off. That's right, Big Dave. The Humankind video has great comments. I didn't even look at it. I'll look later. Probably going to be a pretty tight 5 minute to play off of. NVIDIA goes up or down. I would assume up, but you never know. One World Gov. Now you're still going to have debt. No more debt. kind of decline. Oh, here's the volume spike. Couldn't do it. Well, that's definitely the diagonal resistance. 3 points now on the top side. You break that, we probably move pretty good. We'll see. Kind of get extended on the Stokes here. Volume is increasing. Let's see if that continues through this 5-minute candle. 30 seconds left on it. Try to hold up. Hey. $37's the first level, right there. Damn. Damn. Hopefully it's not a kind of a blow off move and then dump the other way. Not looking so hot on NVIDIA here. kind of what I was afraid of, honestly. Let's get back up there. It's a retest. So it's not dead yet. VIX is still dropping. Tick is negative right now. It's interesting. $23 is a 1 minute cock. There goes any Momo to it. QXO back at the 1250 level. My shit just froze. Okay, we're back. Don't freaking do this to me, E-turd. Big volume difference on that breakout. Solid. See what DOS looks like on this. It's high day. Right through. Ooh, golly, little lag there. Big size. Look at the little lag there. So we've tapped high day. This is the previous resistance check again. It's 1540. I don't like this. Well, that hasn't crossed over yet, but I don't like that if it crosses over. We'll see. This is a 1 minute cuck. Really didn't do anything. cock. All right, another attempt at high day. $0.17. Can we do it? $0.07 away. There was 72. Big volume. Blew through it. Where this came, I don't know where this line came from. Selling half. Lock in a little 20% winner. VIX is still dumping. So we've got to hold that high day. What is it? 115.77. So we're gonna fight over that level. Yeah, this is off my list now. This is starting to build another level at 50. Is there still a seller at 55? It doesn't look like it. Why don't you go sauerkraut? You don't. Why are there so many Argentina Olympic athletes with German last names? Huh? Is this that theory that Nazis from World War II escaped to South America? Well, I guess it's not rumor. I think it's actually historic. Isn't there towns in certain countries that are still somewhat Nazi. All right. It's 5-minute cock, so I'm out the rest there. EXLS. Okay. Interesting through, huh? What's up, the real Don Sean? How you doing, homie? It's a grind this year, but we're making it work. We're red today. Whatever. TBIO still moving. We are all good. She's falling off. We can't seem to have a problem with the last three. What industry are you in, Real Don? You might have told me, but I can't recall. What am I watching, Cater? That's probably the reason why I've never seen this video. It has 146 million views. Oh my gosh. Okay. All right. Potty break. Be right back. All right. This QXO 1250 level still juicy. I got orders ready for it. I just don't want 1255 to be an issue like last time. All right. Even have a 5-minute cuck with it. I mean, this, if you look at yesterday, the reason why I like this so much is yesterday there was a bunch of these. Here's one of them. Big flat top, spent all day. And when it finally broke, it was like a, 50-cent jump. And it actually railed up and went again. Here, it didn't break it. But that one was a big one. And before that,
Almost 3 years.
I Dirty Dan, let's go, bud. 33. Let's go. And Jeff Beanzos. 2 months. Let's go, homie. Did I talk about this one? Yeah, the 11 break. There was one, the 12 or 1150 break. Same idea as what we're seeing here. The only problem with this level now is high day, there was issues here. So if we get the break, it needs to go 1250. Like it's not even there. I'm not sitting in this because it could dump again. Nvidia went. Oh no. Oh my calls. Oh, this is my first price target right here. Damn it. Why am I such a little bitch when it comes to holding calls, man? I still have it in my swing account. That is a killer play. 50 shares? Jeez. No way, this keeps going. It has room to 120. That 116.40 level is like the first fib extension level. That was where my price target was. Pretty freaking tight. You're gonna get a move. When it broke yesterday, what did it look like? Big ass volume beforehand, and then a couple minutes later it went. Is that what the 11 looked like? Can I see this one? This one was weird. Oh, she tied all right, Buzz. Buzz, you got orders out on this one? If and when it breaks? I see 1270 sitting here. He woke up rich from Spangles. Put a little bit of Zynga on here for everybody, because there's not much going on. This is if you have Benzinga. This is when you can mute.
Body of
Twitch
the
and have
Hezbollah
me
military
live in
commander
Discord, so you don't
found in
hear it.
rubble in Beirut's southern suburbs. That from Reuters.
But if you're interested, this is my news
Crude
source
right
that
now
I
is
use.
up about 3.6%,
Benzinga. There's a coupon code if you
$77.43.
use Stock Jock at checkout, 25% off. What is this, Soils?
Cause I'm the E.
Gangsting.
Motherfuckers like it ain't no thing, cause I'm the E.
Why have I feel like I've heard this song? 3 years ago. Okay, I have heard this song. Two hours to go to the Fed rate decision. What happened? Oh yeah. Shred this MM's got that online. Well, they keep whoever's selling shares. I don't know what this thing's doing, but they load up. This is exactly what they did yesterday. If you look at the 11 break and 11:50 break, big ass flat top, And when it finally gave way, it was like a 50-cent move. Where is it? Not that one. This one. Right here. 11.50. Same exact thing, right? But when it went, boom, 50-cent move. What's up, Groovy? So everybody is going to play it looking for that. Does it pop in the dump? I don't know. Could have done that already. So I got orders. If this cracks, they go live. Up to 4,000 shares. Hopefully I get a 50-cent pop. $1,500 per contract? Jeez, Buzz. In Stater, yeah, I'm looking to take this position right here. It's the only thing I like right now. Everything else. What's up, Swinchers? I just read about. Oh, yeah. The news. Disregard the news. Just play this breakout here. You had 540 calls. Jeez. All right, this is a good sign when we start seeing the bid stack at the 49 cent. That's kind of what we need. Just watch as this is different than yesterday. Yesterday it was 10,000 that they would keep reloading. Today it's 20,000 that they keep reloading. Whoever they is, but let's see what happens if this ticks down. Switchers, we haven't had an update on your love life yet. In a while, it feels like. Are you going through a drought here, or you got another fish on the hook? Not to compare women to fish, but you know what I mean. Any plays? Yeah, I'm red on the day right now. I expected I would be red, honestly. I never do good on Fed rate days. So if I can keep it under $1,000 red, It's a win. Do I train after hours? When it's hot, I will. Right now, I've been training a lot pre-market. It seems to be moving really well recently. Funny, I should ask. Nice work, Aphelion. Did he post again, Buzz? In a month, flow has got to be positive to get that August reinvestment coming back. What does he use to gauge that? Like when he says flows must be positive, what is he using to gauge that? What is that metric? Just market going up? Does he have a new video out that I missed? I gotta look now. Oh. Oh. Feel it, my plums. It's gonna happen. LSH trying to curl. He did bond video while you were gone. Oh, fantastic. Private placement, 419. So trades at 290. Jeez. Was that what it was at? Oh my gosh. $13.20. You got a link for it, Shred? I've actually not looked at the news at all on it. There's a podcast that he was on. I'll play that. Talking about, looks like if what moves if someone wins the election. This is July 24th.
To price.
Imagine things in.
Next question, please.
Podcast, Jim and I have been looking forward to it. How are you doing?
Buongiorno, everyone. Doing very well my side. Very happy to see you guys.
Have you fully recovered from Italy's early exit from the euro? Differs rejecting traditional policies in Asia to start off with these empathy.
But they have been at work, and that does slow up the slack on the curve.
Yeah, very interesting. We
was negative during QE years, etc. So we went to a point where people did everything and more to try and onboard duration risk, completely ignoring any potential macro vol risk down the road. Now we're back at zero. So that part can go up in principle. But when it comes to what the Fed is priced to do, I think after the latest rally, we're now seeing the Fed basically priced to cut every quarter pretty regularly for the next couple of years. So that 10-year rate will influence a lot of the pass-through, I think, through the US economy. But that dichotomy between keeping rates higher for longer slowly suffocates and tightens conditions for the private sector. But it does so pretty slowly because of the structure of the private sector in the US, as we described. While if you embark in a rapid cutting cycle, while nominal growth is still strong, well, the effect can be more vicious on the other side, right? You already see markets doing new highs and specifically certain assets. You see gold doing particularly well. And I know this is a point where you want to jump in, Jen, probably to talk about that. And well, the odds of the Trump election, I think we should cover that part too.
Absolutely. Yeah, I think it's been very interesting. We were talking offline briefly. There's been a lot of, I find it interesting. There's been so much talk about the, inflation break-evens and why they haven't responded in the last several years, right? It's been the trade that everybody was talking about. But now that we're starting to see, inflation come back down, that inflation narrative and the people looking at break-evens, people have kind of looked away from that trade and said, well, that's not happening. And I find it interesting, right, as people are doing that, right, which often happens, that we're actually under the hood starting to see a little action there, both in break-evens, gold's response, right? More recently, the steepener, the twos to tens are kind of starting to turn back up and technically look really interesting. Obviously, this dovetails into the Trump likely election here, but I'd love to hear your thoughts on that and also just broadly where you see the steepener, inflation expectations, et cetera.
Yeah. So I would say we have to talk about the Trump trade, I guess, which is something I've heard a lot lately. And how do you trade the increased odds of a Trump victory and specifically of a Republican sweep, which is even more important from a macro policy application perspective, right? If you have the president and the House and the Senate, then well, your policies are more likely going to be applied. And so what the market is doing there, I think here they are taking their probability distribution of outcomes for the elections, and they're now saying, wait a second, I need to recalibrate that, because after the events of last weekend, the odds that Trump's going to win are higher, and the odds of a Republican sweep are also higher. So now we need to reprice a bunch of asset classes with a higher probability towards Trump's policies. Okay, so what are these policies and how do they work? Well, from his economic agenda, I think we can derive that
this is last week.
Three things at least that will be important for markets. The first is restart the tariff engine a way or another. We don't know a lot of the specifics about it.
Doesn't matter.
But we know
it's still talking about. It could be 2 weeks old. It'll still be just
stagflationary
talking about
inflationary on the
potential
margin.
winners of
Before I walk
election
through
and
this,
trade.
important. If Trump applies all of his policies, but from a global macro perspective, you are in a big disinflation, deleveraging.
My guess is they focus on Trump because we already know what
generate much of what he wants. But that's not the point. The point here is the market has to reprice some asset classes based on the increased odds of these policies being applied. With the current set of information, that's what the market will do. So if you look at these policies in isolation, well, tariffs tend to be net inflationary or stagflationary, I should say, in general. So you reduce the amount of trade growth, I would say, plus you increase prices in general, okay? So you do that, and then you have a tough stance on immigration. And net immigration in the US has been very strong so far, and it's been one of the reasons why the labor market has been so fantastically disinflationary, but keeping on pretty nice, because the amount of labor supply has increased rapidly. It's not only a demand story, but the supply has made it so. Wage growth remains contained, and therefore the whole thing looks amazingly disinflationary. Now Trump comes in and says, no way, this is not going to continue. So the flow of this cheap labor supply to the US kind of gets hampered. That's also inflationary on the margin. And then finally, the guy says, I want a weaker dollar. I want the Fed to cut rates. He can't engineer those things really, but he will put pressure on the Federal Reserve. There are even rumors that he might kick Powell out before his term expires. All these things anyway will contribute to the Trump trade. And the Trump trade, I think, is the steepener you were talking about, Jen, because how it works is the moment you start putting pressure on the Fed to be somehow more dovish, on top of policies that are inflationary on top of an economy that from a nominal growth perspective is already doing fine, well, what the market needs to do in bonds is put up some of that earned premium, demand some compensation to buy these long bonds because you have a guy that is applying inflationary policies while forcing the central bank to be dovish. So guess what? I'd want some uncertainty compensation. I mean, what is inflation going to be in the future? Well, more volatile probably. So I want to get paid for it. And that gets into the long end of the curve. And so the curve does steepen. I think this is the Trump trade, the king one, I would say. So we're seeing that happen. There is a more technical part where on a podcast, it's easy to say I'm like a steepener. When you have to put it up, you have to pay negative carry and roll. So it's a trade you pay to be in, which means on a podcast, it's easy to say, if you're a macro trader, you have to check how much does it cost to hold this thing, over the next few months versus how much money do you plan to make on that. That's a different story. I think from a macro standpoint, steepeners are looking very good. The dollar instead, that's a separate topic. We can talk about it. I think gold, Bitcoin deserve attention as well as potential Trump trades as well. And we can chat about that too.
It scares me when you and I agree this much. It really does. Because we've had a lot of disagreements over the years, and that makes for a healthier probability of the trades working for one way or the other.
Why
but
Bitcoin?
I think you have completely highlighted the three-legged stool.
I'm the crypto president.
Highlighted, right? Tariffs are the obvious one, as you mentioned.
Don't sell your
Everybody knows
Bitcoin.
Tariffs. He's about as loud
Bitcoin
and boisterous.
reserve.
We've seen that before.
I mean, just the talk
that
is going to
makes
send
me a
it
little more
over
skeptical
80K.
that he'll. That's one that makes me. I'm not as confident that we'll get the tariff response.
The great news about crypto is
bluster,
while all markets are closed, when elections going on, we'll still be able to trade cryptocurrency.
You touched on it exactly. That is so important. And that's so different than what we've seen this time around. And it's the one that he has the least
And I will be here for
ability to not do. Since he was in office last time, that has become the
So
rallying
googly.
cry.
Think of the 100
It's
biddies.
the xenophobia we all know that come during these populist cycles.
Oh,
That's happening here
pressure
in the US
here.
as well. And it's visceral here
chunks.
if you're in the United States and if you're in a major city, which are a lot of these independent voters that are now kind of moving over.
They didn't
You have,
reload.
through policies that were very smart on Republicans' ends, they bust a lot of these immigrants that are coming over the border into the cities in the northern across the U.S. Being here in Chicago, most of the homeless people now, we've dealt with a lot of the homeless policy for citizens here, and that part's gotten better. But what's happened is we have migrants on every corner now with their families, and that's a new thing, and that creates a very different
XRP. That might be the
psychology
play. I never
here
thought
in
of
the
that.
US. So there's this real xenophobia that's developing. Immigration is the biggest topic, and it's actually more widespread than it has been historically. It's becoming a kind of a national phenomenon. So I do expect strong anti-immigration policy, and I think
Bitcoin
the
is
key.
the
It's
play. I
been
think a lot
really
of
the thing that's
institutional
allowed
big
labor to
boys
not,
don't have crypto because of the
inflation
fear of
to stay at bay here relative in
government.
that labor piece, which I think could be a real.
you get
What's
a
also
government
interesting,
like the
actually,
US
is
saying,
his
"No, we're
choice
going to
of vice
have a
president,
Bitcoin
which we know
reserve."
now, since we're recording on Tuesday. Because as far as I know, JD Vance has been incredibly tough and outspoken about China, saying China is the biggest risk that the US face right now. So in that sense, you could say that maybe I'm not disputing what you said about immigration, but actually I think
This is gonna
the whole
explode
tariffs thing
if and
about
when it
adding
breaks.
60% tariffs on China and 10% on everyone else, probably
They're both important.
Exactly, they're both important right now.
Agreed.
And
For those that have
that
DOS,
China
where's
policy,
your
everybody
like
knows
conditional
and is expecting,
orders?
I guess, was my point. The immigration one is
How would
what
I do this on DOS?
many
Absolutely.
people are sleeping on. But I agree that the China in particular policy is
But that
critical.
leads me to a question to both of you. Because I'm not entirely
Ask them.
sure,
Never heard of
except
that
I probably know where you stand on this, Jem, but I may have forgotten about your thoughts on this, Alf. I mean, I have heard some economists argue, and I'm not an expert, right? But that the inflation, because it comes down to inflation as you talked about earlier, but
Who we listen
that
to?
the
This is
70s
Kim
were largely
Jem
a cyclical
Cardone.
inflation that resulted from policy errors, while the 40s was
why did I
more a
say Cardone?
structural one that sort of in the aftermath of the Second World War. And now we
This
have kind
is
of a
the
bit
podcast
of
we're
both.
listening to right here.
And now we're throwing this, new regime
I don't know
potentially
who this
in
guy
the US
is, but
into
I
all of
loaded
this,
up for
everything
Kim
else that's
Carson.
going on
Jam
right now.
Carson. whatever his
So
name
the
is.
question is, I mean, what kind of inflation are we really dealing with here?
I'm going to tell you my answer, but I don't think this is particularly tradable in any forecastable time horizon. So it's just a pour
Twitch doesn't
parler,
let
very
you type
interesting
his first
discussion.
name? Oh, because
So,
it looks
so
like
far,
cum?
Jim and I discussed about how the market should adjust the
That's
probability distribution
kinda
given
crazy.
Trump's policies. Okay, and these policies are, we can discuss what's more important, tariffs or net immigration curve, but they're both stagflationary, inflationary. So we think the market should react in a certain way. The next question should be how much is already priced in, but we can already discuss about it. And then it's positive carry, negative carry, all these framework type of discussions. Okay, cool. This one instead is a more theoretical one. Let's start from what the market is pricing here. The market is pricing that what we saw is basically a cyclical thing, that it's pretty much behind us. That's what the market is pricing, okay? The only thing where the market slightly differs, and it's touching a small structural probability that inflation will actually be higher, is the nominal neutral rate that the bond market is pricing. So if you look at 5-year forward Fed funds and you look like, well, let me see what the market, this is coming as a sort of a neutral rate 5 year down the road. Right now on my screen, 5-year forward Fed funds are priced at about 3.5% in nominal terms. Ask me back in 2019, how many people would say that the nominal neutral Fed fund rate at which the US economy runs smoothly is 3.5%, and I would tell you a small subset of the people. Most of them would have said 2, yeah, Jem, one of them, I know, 2, 2.5, and now the market's like, no, it's 3.5. Is it saying it's 5? No, but 3.5. So it's a touching some premium. This is the only indication, because if you look at, for example, long end vol being priced in bond markets, right? If you would expect a high structural inflation, what you would get in exchanges, more vol price in the back end of the curve, right? Because it's got to be higher. You have a higher level of inflation, which means the Fed funds will need to be higher and then need to be cut faster and then hiked faster, etc. You don't have any of that.
MPCH match group
So that's
at
what the market thinks. The market thinks like 80% cyclical behind us and 20% odds, roughly.
Earlier,
that's
that's Michael Tango.
Personally, I think it might be closer to 65-35 type of thingy. So I'm a little bit higher on the odds that I think we should reprice some of this risk premia towards, let's say, inflation risk premia a little bit higher. I think we have arguments to point to that. And there are trades you can park in your book and spend some premium and, leave them there, like the long and ball that I discussed. But I'm not sure it's a highly tradable topic of discussion. It's a nice one, but it's not going to make or lose money, I think, for listeners in the short run.
Two things that I think are interesting. So first of all, markets, as you know, Alf, can be incredibly illogical. To highlight my favorite example of this, 10-year vol in the S&P 500 in 2007 was 13.5 at its low, right before the crisis. In 2009, 2 years later, 10-year vol was 60% at its peak. Both of those outcomes are absolutely illogical.
Eurodollar stuff?
Everybody knows they're illogical.
Not really.
They go there anyway.
You got something,
and
like
they go
a podcast
there
or
anyway as a
something that you're
function of
referring to?
structural dynamics of supply and demand. So I always caution people when they're looking particularly at long-dated things like that are liquid, to subscribe some type of logical. Just because those expectations are there does not mean that's what's likely. I just want to put that out there. 2, Niels, you mentioned a policy error in the 60s and 70s. I would not classify that as a policy error. I think it's semantics. But the reason I wouldn't qualify it as a policy error is because I would argue that politicians didn't have a choice. There was a political dynamic in place, and politicians are vehicles for the most part. They cannot just go against the public's demands, at least in a democracy or a republic. They have to work. These guys are, at the end of the day, marketers. I mean, I would argue Trump is a marketer, right? He has found a source of demand that people want, and he is selling it to them.
Pods back in 2019.
Right. That is why the immigration policy is likely to be what it is, as I mentioned, right? This is why the anti-China stuff has come about after all these years. And so in the 60s, there was this growing
Somehow I got filled.
generational divide.
Somehow I got filled.
There was a populist rhetoric and move, right? And eventually, ironically, we can get into the assassination and its effect with JFK's assassination.
Not really sure how I got filled.
Led for a release.
Since it never
of
broke
policy,
the freaking
which
level.
is what LBJ did. He took that sentiment and passed the Great Society program here in the United States. Some people will still
That's a
say,
big
point to the
volume
Great
there,
Society
though.
program and say it was an incredible piece of legislature or whatever. But it drove it released this populist push.
There's the 1255
And,
right behind it.
That also led to
I'm gonna exit
protectionism.
that. I don't know how I got
and
filled.
Eventually,
No, ticker Oracle or
I
CL
reported
and ticker
India that
NVIDIA.
a ransomware attack has
it led to protection.
Shares of Oracle seen increased activity.
about 300
Venture
banks
Beats
in India to shut down temporarily.
Reporting Oracle is announcing
And
an
you
expansion
could
of its
argue that
partnership with
they're a
NVIDIA,
mistake, and in a
introducing
sense
new
they were a mistake. They
GPU
did
options
drive the
that now
inflation.
being
But in my
circulated.
view, they were essentially inevitable in some form or another. Now, it may have been more extreme. They could have done things along the way that were maybe more
New GPU
economically
options.
thoughtful to make it less bad.
Oh,
But the
so you're gonna go
structural
red.
inflation from that period was
This is what
a
I'm talking
function
about,
of
man.
the populism
Breaking
and
news. Stocks
the
moving up
the
and
zeitgeist of
down.
that generation,
Like,
the baby
what
boomer
is that?
generation that came to political dominance during that time. We are seeing the same thing happen. And so if we make the same mistakes again, is that a policy error? If at the end of the day,
This is the kind of stuff that
politicians don't
happens
really
though
have a
on Fed rate
choice,
decision days.
right?
Like news plays
that's the
get
question.
stuffed.
And now I think what we need to account for is that Trump might now have enough of a mandate.
They
He
really
may
do.
have enough of a ability to go against some of these popular policies. Ironically, like it took Nixon of all people to open up China, right? I think people talk about that. Trump may have a mandate, enough of and may be perceived as populist enough to actually do things that are counterintuitively
Freaking A, now it
less
goes.
populist. And I think that's something we need to be mindful of. I do think we're at a period much like
That's
the
for the
60s and
commentary
70s.
on
This is
Oracle. The
not-
announcement centers on the
you could argue
addition of
because COVID
NVIDIA
that some of these
GPUs to
things were
OCI's compute
much like
offering
coming
and new
back
virtual
from the
machine
war.
options
Initial
for NVIDIA Tensor Core
inflationary impulses
GPUs.
from COVID,
That coming from VentureBeat.
which I think we well know. But I think more importantly is this millennial on down, structural populism and desire to reduce inequality. That's my view.
One thing I wanted to go back to actually in our conversation that I'm also interested is kind of how your view has changed in the last year, Alf. I remember a year ago you were pretty vocal
It was a
about interest
1255.
rates being slashed to 1% or below in 2024.
There it
That could
is.
still happen, of course. We don't know. But but I sense a little bit of a changed view, a little bit. What could have caused you to believe that they would have to be so aggressive in that? And maybe what's changed in your view that actually, no, this is a bit different?
Well, I would say I am a macro investor, which means that I'm not paid to be right or wrong, which is a very strong statement. So macro investors are not paid to be right. They're paid to
All right, how much is it?
look at
12?
the set of pricing.
How much
and
is
then
it?
look at
1275.
Potential outcomes and say, what is that? It's priced at the way
There's
that I would
nothing
want
really
out of
here.
my portfolio, okay, at the right price, because
As far
the
as
distribution might
the
shift in
window
the future.
goes.
So at some point you went to price 10-year rates at 5% in 2023. Okay, so to price 10-year rates at 5%, you have to make a lot of hawkish assumptions that this is gonna, Fed funds have to be at 4% nominal neutral, 4, and then you have to make a certain assumption about term premium being positive. And it's quite a hawkish set of pricing. So when you look at that, you might say, okay,
Ticker
let's
Google
look at
shares
the
seeing an
table.
increase of
On the
activity,
other
new
side,
lows on
how much
Google.
do I pay now in order to onboard some of that? And of course, some of that also comes with
Another attempt
the
up
idea
here on
that
the
sooner or
15
later,
second.
the lags come in. They're slow to come in, but ultimately the pass-through needs to work out through the economy. So then you look at that, and then there are points where in, January 2024, there are 7 cuts priced for 2024.
See if they add to
and
this, or
like,
is this just a
it's
solid
the complete
block?
opposite set of pricing. So then you have to be pretty nimble, I would argue. Where I was wrong there was in early 2023 and late 2022, where I had
Doesn't
completely
look like they're
overlooked
reloading
the
it.
fact that the private sector in the US was structured very differently than 2006, 2007. And so the pass-through would have been slow. And then, of course, you position the portfolio more towards the odds of recession, then you're paying premium for nothing. And then you need to stop out and you need to reassess. But the reassessment has been, I think, a combination of looking a bit more deeper into the structure of the US economy, which is quite interesting this time. The fiscal boom of 2023, which has come on top of the fiscal of 2020, 2021, by the way. So Biden also came back pretty strong with fiscal again in 2023. So you need to put that into account. But ultimately, Niels, it's more about, again, looking at the set of distribution and pricing and trying to look at where the distribution might be unreasonable. And sometimes it doesn't demand you to be terminally right on a macro hypothesis, although it sounds very fancy then on Twitter. If you were right on the hypothesis, then you're a hero. But in principle, that's not how it works. You just look at different set of distributions and you say, where can I onboard some tails or some part of distribution, which are, I don't know.
Come on, we've been waiting all day for this move, and then you're just going to give it right back.
Attention to a certain topic or are willing to pay for that particular thing. That's, I think, the job of a macro investor. It's a bit different than the job of a, I would say, macro strategist or podcaster, but those are two different jobs, I would argue.
By the way, I forgot to say that regarding the Chinese and U.S. relationship, there was a little bit of good news, actually, which usually indicates that diplomacy is on a mend, and that is the fact that I saw that China has agreed to lend 2 pandas to the San Diego Zoo, which they don't do normally if there's any form of political trouble. Anyways, that's a little bit of a sideshow. Jim, you wanted to jump in there?
Is that a bearish comment? No,
yes, maybe.
Panda bears aren't actually bears, so I don't think we can. No, I think the reality is, I like this a little bit, Alf, because we can now disagree again. This is my favorite. So no, but I
May is still offering support.
Late 23,
CrowdStrike. Now you don't.
The way you were talking about, and part of our disagreement then was, again, partially because of how the curve was priced.
Trying to stay nimble.
But also, I think broadly at the time, understandably, you were thinking, if I don't want to put words in your mouth, but about the cyclical realities, right? And
that's your CrowdStrike, Charlie Romeo Whiskey Delta. Starts seeing an increase of activity, new lows for CrowdStrike.
About then, which I think has broadly been true, and I think people are coming around to, is that this is not going to work like it's worked the last 20, 30 years, right? In the sense that this is not just about cyclical effects. Right? Just because we're going into recession doesn't mean long-term rates are going to come down. And I think that is eye-opening to people. And I think part of why the curve has been incorrect and inefficient is because 30 to 40 years.
So we're going into a recession, but long-term rates are not going to come down.
The way models have worked for 30, 40 years has a lot of,
that sounds
mental
fun.
memory,
That sounds real fun.
And that I think, if this curve does steepen and break-evens do start to release and break out, I think that could really get a lot of people kind of offsides. I think people got a little bit offsides in 2004, right? Because they were playing that cyclical game. But now that the recession is coming, and it is coming, right? A slowdown, at least in the short term, is coming. How deep it will be, how meaningful it will be, whether it's just stagnation, we can argue. But I think this secular dynamic of inflation caused by not cyclical dynamics, not whether the economy is slowing or accelerating, but what's happening to things on the margin, meaning tariffs, immigration, just broad populism, and the rebalancing of wealth to different parties, I think is critical to this inflationary story. And that's what was true in the 60s and 70s. And that's what's true when interest rates probably are structurally marching higher versus just a cyclical back and forth. I'd love to hear your thoughts about that, A, and B, if you agree with that or not, and also how you think about these cyclical effects now versus the bigger structural macro effects, which, by the way, the bigger structural macro effects literally almost didn't matter for 30, 40 years. Being a macro fund was a hard place to be for 30, 40 years, and that's changing. I think that's part of probably why you're launching a macro fund. We do a lot more macro than we used to, right? Because it matters more. Would love to hear your thoughts.
Yeah, relevant again, finally, after a couple of years of, realizes some people at 7 or 8 for a prolonged period of time and all about carry and very little to do. You were rewarded nicely for beta on a risk-adjusted basis. So it was a tough period, but now I think things are different. So now we go back to talk about the cycles versus the structural part, which is a very interesting discussion. I think.
Recessionary market?
So on a cyclical perspective, I think that
pretty crappy actually. If you want to count last year as a recession, if you count it,
faster in other economies. We
pretty
mentioned
crappy.
Sweden and New Zealand, which, by the way, those are topics that in a macro fund you can play. You can go currencies, you can go rates versus rates, and do different type of relative value expressions. Macro investing is not, people think it's like punting on 10-year treasuries up or down. It's not necessarily that. It's a bunch of other things you can do which don't have beta attached to it, like relative value exposures between two different economies that have two different pass-through cycles, right? So the pass-through in the US is low, but it is happening. I think we see it. The labor market, from the demand perspective, it has been slowing down. And you can see that happening, right? And other signs, I think, we're finally, a bit of the pass-through is coming there. So what's going to happen then? If you play it in the bond market, then I think you're right in the fact that you should play it at the front end and not at the long end. Because normally during a cutting cycle, due to a slowdown in nominal growth, then, well, the curve steepens.
GS Goldman Sachs, Joe Terranova on CNBC said see more upside in Goldman Sachs, possibly $550 to $600.
When the Fed cuts,
that's GS Goldman Sachs.
Growth and forward inflation, and so the long end can incorporate some of that potential effect down the road. That's a normal stance, so you should already play it at the front end rather than at the long end. This time even more, I would argue, Jen, because of what we discussed before with Trump. His policies are a steepener, I would say, on the margin. And then because of the structural things where we might disagree whether it's a 35% odds or a 50% odd or whatever is the odds, but the odds are, we both agree there, funnily enough,
SERV coming back up
higher than what the market is today pricing in. That structurally we need to assign a bit more inflation risk premium, a bit more term premium into market, and these all goes into long end volatility and, a steepener. Also, that part is a steepener of the curve, requires investors to demand higher yields at the long end. So then what happens is that you can get a recession and you can get a steepener that is even faster than the steepener you would expect during a recession, because not only you get the cyclical part.
That ticker CNSP, Charlie November, Sandy Papa, share spike with activity. Note company withdrawing their offering for RW.
We go
with CNSP.
Their offering.
Trade structuring. We talk about this thing and then people start looking at it. And when, by the way, Bloomberg just released a front page article talking about the steepener and the Trump trade. So
see where this goes.
Tells you that we are probably 50-60% priced already. Okay, just a word of caution from my side. Then you look at this thing, and my screen now says that if you want to hold a 2-stance duration-weighted steepener in your portfolio, so you buy the 2-year futures and you sell the 10-year future, and in the right size, so that it's the curve move that matters and nothing else. So you're matching the duration of the two contracts. And then you hold this thing. You basically have to pay about 20 basis points per quarter to hold the trade. So translating, the 2-stance curve is inverted at about minus 20 basis points, the time as we speak. If in October, so 3 months from now, the curve has gone to 0, so it has disinverted basically.
Damn.
Okay, you have made no money, because you've just paid the 20 basis point of carry and roll to be in the trade. And so you see, can the curve go to plus 50? Sure, it can, but the hurdle that you face because of the negative carry and roll is not something that you can overlook easily. So then you have to think a bit smarter, like, okay, how do I do this? Can I use some options where
yesterday
I will have to pay
from
premium,
$1?
but maybe that's,
how many of these have we seen today do this and then all will come all the way back up today?
Space, or can I look at other asset classes that also benefit from a Trump election?
I don't know. We'll
and
see.
in my opinion,
it's got to clear this 50.
We discussed gold, but also Bitcoin is an interesting case in point here, at least in the short run, for a couple of reasons. You have the correlations between Bitcoin, gold, and Nasdaq, and Kaya.
It's been a while since
Bitcoin,
one of these that canceled their offering actually
class,
keeps going.
I think is well explained by a regression of 2 variables plus some residual. The 2 variables are gold and Bitcoin. Gold and the Nasdaq. And then the third variable is, of course, some residual. You can't fully explain to be only 2 variables, but gold and the Nasdaq explain a lot of the Bitcoin price action as a macro asset class, that is, right? Occasionally, you will find a Mt. Gox price or some liquidation, some very idiosyncratic crypto event, but as a macro class, the idea of having a gold at a higher beta, a gold with tech features. So basically, gold and the Nasdaq mixed together works very well to explain, generally speaking, the beta of Bitcoin. Now, if you regress to the short-term performance of Bitcoin versus gold versus the Nasdaq, you'll find, well, first, an underperformance of Bitcoin.
I mean, this guy
second, correlations that are
off of that offering
negative, which when it happens in the past, it has to do with some short-lived idiosyncratic events. Like today, we can say Mt. Gox or whatever it is the event.
Generally, 40.
Correlations tend to mean revert to their positive levels. And if you look at that, you should assume Bitcoin might have some ground to catch up. But importantly, like gold, it is an asset that can do well under Trump because, again, if you apply inflationary policies while you force or you pressure the Fed to be dovish, the market will look for release valves for this macro theme, right? So what is a release valve? Well, gold, right? Because what you're doing is you are artificially devaluing your currency. You are effectively forcing the central bank to be dovish while you apply inflationary policies. That's like emerging market playbook number one to devalue your currency pretty much. And so what happens is that assets that are priced in that currency and that tend to be a bit disconnected from this financial system tend to do particularly well. So gold is clearly the king expression of that. But hey, Bitcoin can do pretty well in that environment too. So what about upside optionality on Bitcoin? Can that be an idea? Yeah, you go and look into these options and you see that this upside for Bitcoin, breaching new highs over the next 3 months, trading at 75K, 80K, something along the line of that, the complexity there isn't particularly expensive. So I think you have to be creative in macro. You have to look at odds, possibilities, look at what's priced in markets, probability distribution, option pricing, and see what you can bring on. And does that mean I'm a Bitcoin evangelist? No, not at all. It's an asset class like anyone else. You just need to be open-minded, I think.
It's starting to sound like a vol trader. I completely, now you're speaking my language. It's all about getting the distribution right. And as we've talked about, options are a much more efficient, optimizable way to express information. And to also, in a time of higher interest rates, capture that yield while still making your bets as well, which is, I think, an incredibly important point as well. If you do a historic analysis on volatility specifically and the distribution specifically, not directions, how everybody thinks, and you do it for different asset classes, which we've done over that 15-year period, it is a dramatically different set of distributions for these asset classes. Never mind the direction. The distribution and the volatility for different asset classes are dramatically different. Most people may think that commodities, industrial commodities, had a very similar type of distribution to maybe gold during that time period. Not the case. They were almost polar opposite. Energy, and they both went top, to the right, bottom left to top right. So people think, oh, they're similar, but their personalities could not have been more different from a distribution perspective. Oil volatility actually got compressed during that time. Gold volatility exploded. And why? Because one is really more of a hallmark, as you mentioned, of the FX space and rates, right? And broadly inflation. And one is much more a function of supply and demand and economic growth. And what we saw is an underpinning of price that was a steady, consistent, controlled march higher with some shocks, but broadly a very smooth curve to oil. Whereas when we talk about gold, it was incredibly volatile, but significantly higher. And the best performing asset was gold, right? But in the context of significantly higher volatility. So I think that's important. Bonds, FX, gold, the dollar all had significant volatility during that time, but commodities, actually, ironically, equities, a lot of these things had very low relative volatility and actually lower as you get to longer time periods. So I think that's very important. And I think that allows for incredible opportunities. I've been saying for some time, gold vol is an incredible opportunity, not just being long of gold, which I think is important as well, but long gold with long dated calls. I think that is an incredibly optimal trade. And it can be funded by selling vol and other parts of the distribution in some of these other assets like equities and also in oil and other such industrial commodities. I think that's an interesting set of trades and opportunities, and not the way most people necessarily think about things, but where, like you said, if you're creative, there's significant opportunities. One thing we didn't touch on, which I think is important and that will drive this, is not just the pricing and those dynamics, but this, people are talking about the Supreme Court decision here in the U.S., just to shift gears a little bit. That is not just the assassination attempt. That gives Trump significantly more power than the last time he was in power. Gives him the ability to really accomplish single-handedly, whether he has both sides of Congress or not, which he likely will, but really accomplish a lot of policies and exert a lot more influence than he did last time around. And I think that and the power politics that he, professes to and likely will try and deploy, similar to your initial point and your tweet that we talked about at the beginning of the show, will allow for a considerably more disconnect between the United States and emerging markets. It will allow the U.S. to export some of this inflation, to tax the rest of the world, even though this is a structural global phenomenon. And I think that itself will cause significant volatility. And this is basically the qualitative reason we had those quantitative outcomes in the 60s and 70s as well. That we will be able to, in the United States, export some of these problems through pure power politics. And I think Trump is willing to do that and will likely try his best to do that. Now, that will be volatile along the way. But I do think that makes for interesting macro trades and an incredible opportunity. And you don't necessarily have to get that trade right in the direction, but you can get it right in the form of the distribution and volatility.
Can I just, before you jump in here, because that's one thing I wanted to ask both of you, in a sense that we've talked a lot about Trump. Obviously, what happened this weekend makes it very likely that he will win and maybe win big. Of course, Jim, I have to remind you that in our year-end conversation last year, my outrageous prediction was that neither Trump nor Biden would be on the ballot, which oddly enough suddenly seems not completely unlikely for different reasons, of course. But what I really wanted to ask is, how does a Trump win? We've talked about the U.S. economy a lot, but what about Europe? What about other parts of the world? You've just touched on emerging market, et cetera, et cetera. But we're going to be dealing with something very different at a point where the global geopolitical, world is very fragile. So I'd love to hear your thoughts, and also in particular from you, Alf. I mean, we just had European elections. They're going in kind of a little bit different directions than what some had expected, and how you see that play out.
Well, in Europe, we can talk about the auto exporting thing because of the tariffs. But again, this is just an ancillary topic. The most important one is defense spending in Europe. Because basically, Europe acts as an ancillary to NATO and to the United States when it comes to defense, right? Military defense spending. And, Trump might have some different ideas about, how much and what is the role that the US wants to play with NATO and, foreign policy and all of that. So that is relevant because it affects fiscal and budgeting and that side of things over here in Europe. So I would say that is the most important thing to discuss, because first then the European policies on defense must change, the spending must change.
BOLT, Bulk Biotherapeutics, Bovine coming in.
And
Bravo, Lima Tango, BOLT.
Between Europe and the US, because the US is monetary sovereign and fiscal sovereign, and European countries are not. European countries are neither of the two, if you ask me. They are somehow fiscal sovereign, but to a certain extent, till Europe allows, basically, and they are not monetary sovereign per se. So that's quite an interesting thing. It's a bit like seeing the UK doing that, trying with Liz Truss that inflationary budget on top of an inflationary economy, and then having the bond vigilantes knock at the door and selling the pound and selling long end bonds, right? That's the emerging market bond vigilantes trade, where you sell your currency and you sell your bonds at the same time. And the US can afford a lot more there. The US is the reserve currency issuer of the world. So there is a structural demand for the dollar because of the euro-dollar system and how we have created the world around the dollar. The US can afford a lot more from that perspective, but places like Europe or the UK cannot. It's not the same thing. You know, we have limitations by architecture, basically, and by not issuing the reserve currency of the world. And then on emerging markets, I think that if you are an emerging market highly relying on trade export and trade growth in general, you're not looking particularly good or to benefit from Trump policies. And if you are a country, you're lucky because you are Mexico or you're China in this case, then for idiosyncratic reasons, you're going to get a double whammy, right? So now, dollar Mexico, for example, is a trade that everybody is thinking about when they think about a Trump win. But again, dollar Mexico is negative carry, ladies and gentlemen. So what are you going to do about that? Question mark. Dollar China upside, oh, people love that because it's positive carry, right? I mean, the PBOC rates are below the Fed rates, also in the forwards and spot, so you don't pay to be in the trade. There, the problem is that the PBOC pretty much controls where the FX is. So basically, you can pay. In principle, it's the holy grail of the trades, right? It's positive carry, positive convexity. Everybody loves that, but let's talk about the positive convexity. I mean, the PBOC can make your life very complicated. They can devalue the currency, or they can choose to liquidate the enormous amount of FX reserves they sit on and make your life difficult, you know? So I think those trades are a bit harder to express as the Trump trade. They are clean in a podcast discussion. They're harder to express in a macro book. A bit like, I think the steepeners and importantly the upside options on gold and Bitcoin are the most interesting ones, I would say.
What are your thoughts, Jim?
Well, I think shifting gears maybe just slightly is the Fed, which is the part we've kind of not talked about. You mentioned it in your I mentioned the three-legged stool. You know, is the Fed going to change its personality? Is Trump going to take control of the Fed, and is it going to be less independent? That is a huge thing that people are kind of whispering about, but nobody's really betting on, talking about like a convex outcome and something that can really exert massive maximum pressure. You know, yeah, I think it's everything, right? And again, back to that Supreme Court decision, I think that allows Trump to do a lot of things that other people haven't been able to do in the past. And I think he's somebody who's willing to do things that are outside the box. I think if he wants to change Powell, he will. And I think given a mandate that he now has, I mean, I see Nixon as a analogy, right? Analogous. I think Trump is going to run. You know, you hear about Erdoganomics, right? I think there's a Trumponomics that's going to be akin, but scarier. It's with the power of the reserve currency of the world. And I think if he decides to run things incredibly hot, he can probably get away with it without some of the dramatic inflationary effects. I think it will be inflationary. But again, he'll essentially try and tax the rest of the world. I mean, if you look at his speeches, there's a famous one, I think it was in '88 with Oprah Winfrey. Like he's done exactly what he said then. You know, his number one focus and his zeitgeist is, hey, we're not charging the rest of the world. We are the most powerful country in the world. And yet we are seemingly at times, you know, benevolent. Like he wants to completely tax the rest of the world for the power of the empire. That's his zeitgeist. And I think the Federal Reserve allows him to, power of the Federal Reserve allows him to do that. And that is, I mean, that is a convex moment if I've ever heard one.
I think you're touching on, this is part of the property distribution, which I think it's poorly priced still. So the body of the move where Bloomberg is talking about the steepener because of the inflationary policies, fine, we discussed that. I think it's priced 50-60%. You can go and buy some of that remaining juice left if you think that it's going to win, it's going to sweep and all. But now we're talking different. Now we're talking tail risks. different story. So we are in a part of the distribution which is not priced at all. So there you should look at like dollar vol, long dated gold and Bitcoin vol, bond vol. So anything that basically has to price a probability that he's gonna go and apply emerging market-like policies, because that's what we're discussing here, Jem. We're saying he's gonna, President Lula, like, go and handpick who's gonna be his new Fed chair. And this is what Lula is trying to do in Brazil right now by basically kicking out the current governor and trying to handpick a new one. And the market went like, oh yeah, sure. So they priced a bunch of risk premium in the front end of the Brazilian rates curve, and they sold the Brazilian real aggressively for 9-10 sessions in a row. So you start getting that price reaction, but now you're talking US, not Brazil anymore. So you're talking something systematically important if you would choose to trigger one of these policies, right, that we discussed. And that's a different ball game. And the way to play it, I think, is, Neil, I see you there, Neil. So I'm just going to finish this with a joke, which is, I think Ray Dalio for the last 40 years has called for this bond vigilantes trade, which is like, you sell the dollar and you sell bonds at the same time and all that. And it's never happened. But now we are, I think, at a point where it's more reasonable to price that tail a little bit fatter. And the market isn't doing that. The market isn't doing that at all.
It's funny because I had it actually as one of my points. I mean, and you're kind of alluding to it, or maybe you're not. Maybe I'm misunderstanding it here. But I mean, I'm kind of thinking, I mean, should we start to take serious the idea that countries like the US could lose their AAA rating?
Oh, yeah, sure. I mean, credit ratings are very political thing. I don't think it matters too much for the asset allocation thingy. I mean, from a regulatory standpoint, only when you get downgraded below AA minus for certain regulation, it makes it a little bit more punitive to hold your bonds rather than to own a AAA bond. But
So maybe let me interrupt you here. I think what I'm trying to say is that it's a little bit different. It's the whole understanding of what AAA means. It's the whole understanding of what the risk-free rate of return is. I think that's what I mean. That's what I worry about, that there's this, it's a little bit like, we haven't spoken much about Biden, but it's a little bit like what happened at the debate, right? Before the debate, people close to him, a lot of people in their own minds knew that there were some issues, there were some problems. But as Ben Hunt says, once everybody saw the debate, everybody knew that everybody knew, right? And it's that mindset shift that I'm thinking about, the whole risk-free rate of return.
Yeah, so sorry if I went into the credit regulatory side of things.
No, it's fine.
Now I understand the question. The answer is yes, we're talking about that tail risk specifically, Niels, here. We're talking about the fact that the US is the reserve currency of the world, and it's the most used collateral. T-bills are the most used collateral in any type of leverage transaction at any level. And the repo market in the US is the biggest in the world because we know the US policymakers normally play by certain rules. So first of all, they don't handpick their Fed member and they kick out the current one. And there is a rule of law and there is a bunch of stuff that we take for granted by now. And this is one of the reasons why we have managed to build a gigantic leverage system around the dollar and dollar collateral. That's why it works. Now you start shattering the foundations of that, and the story is very different. And as Jem was saying as well, Trump says that the US is sometimes benevolent with the rest of the world. Yes, guess what? This is how the system is supposed to work. If you issue the reserve currency of the world, ladies and gentlemen, you are supposed to issue this T-bills, this collateral, to provide dollar liquidity to the outside world when it's needed, because there are $12 trillion of foreign debt issued in dollars by countries that don't have access to the dollar, unless they have a liquidity swap line with the Fed and other sort of ways to get hands on the dollar. So Trump wants to, I think he doesn't want to necessarily shatter the foundations, but he risks doing that because, as Jem says, he's a power guy, he's a power play guy, and he might overstep. He might, or maybe he might not. We don't know, but we're discussing here, what about these tails? Like, how are they priced? Like, what probability do they assign to Trump overstepping one of his policy agendas? And the answer is probability is close to zero. Like, if you look at the details of this type of stuff, honestly, like, we can make an assumption, like, as we speak, gold is hitting new highs, okay? new all-time highs once again as we speak. So where is gold supposed to trade if Trump oversteps on one of these policies and therefore shatters the foundation of the euro-dollar system, of the reserve currency status of the dollar? Well, you name it, ladies and gentlemen, but you look at the distribution of gold and you look at the right side and you say 2 standard deviation, 3 standard deviation. That's the type of area where you need to look at. And then you go and look at these long-dated call options and they give it to you like it's nothing. And so that's what we're talking about here. Again, it might mean you just waste your premium and you end up with nothing. That's still possible. But macro investing is about looking at odds and looking at the expected value of your trade versus what you think the odds are. And hopefully, sometimes you'll be better than the market in forecasting these odds, and therefore you'll make money. And I think here we're talking about underestimated tails, and what Jem has said is actually correct. The market is probably underestimating some of these tail Trump policies, let's say.
I think if anybody listening to this, walks away with one thing.
Looks like we got another level here, huh?
It's not just about the probabilities. It's about the magnitude, right? It's about the distribution. And agreed, the probabilities may be priced in at this point, but the magnitude sure isn't. And those tail events you can bet on with much better consistent risk reward trades. And I think that really is critical to implementation of these trades. So I think well said, and I couldn't agree more. I do think last thing I'll say about this briefly is gold is interesting because where these tails are pricing, particularly shorter term, versus where the vol is pricing longer term, I think offers represents some opportunities. You were seeing significantly higher vol in let's say a January 3,000 call, versus let's say, or 3,100 call versus what you're seeing in a 270 or 280 call, in GLD out in, June or September. There are real opportunities to get duration, which I think is cheap relative to the tail and the short term. And I think that's particularly interesting. I will add to that.
Coming up in a little over 1 hour, the Fed rate decision, and at 2:30 p.m.
the election odds
FOMC
into
press
the end of the year,
conference.
vol odds that were there, right, because of past elections and all the things. Now that there's certainty, is still quite highly priced relative. Whereas if you think about Obama or Biden, right, they came in and passed massive policies. Now you have a Trump that not only has that mandate, who's likely to get a full power, he's somebody who really wants to exert policy and a change and a difference. And I think the vol in Q1 of next year is dramatically underpriced relative to some of that election and end of year vol, not just in gold, but across a lot of different asset classes. So something else to think about when we're talking about vol, magnitude, duration, distribution. These things are very important to get in some of these trades right.
As you were
Great stuff,
speaking,
guys. Yeah.
as you were speaking,
Go
Jem, I had to fire up my Bloomberg because last time I looked at the long-dated gold calls. So let's give some juice to people. So I looked at a 20-year distribution of gold returns. I took like 100 trading days. So let's say we're going to, somewhere like the end of the year type of expiry is something along the lines of that, okay? So it's like 100 trading days, 5 months, roughly, okay? Give or take. So around the end of the year, okay? So you look at these options now, let's say expiring 20th of December, 30th of December, and then a 2 standard deviation moving gold over the last 20 years, where none of this craziness has happened apart from the crisis of 2008. We are never debated whether the US system could break, okay? So it's a very conservative 2 sigma event, let's say. It's 23%. So 23% moving gold during the time horizon could send gold to $3,000.
Final trades on CNBC, IBKR, Interactive Brokers,
if you look
LDOS,
at these
Lados,
right now, the market implied
MSFT,
probability that you get
Microsoft,
in these. Let's say you want to cap your upside at some point. And you say,
XLF.
look, I'm going to buy a call, I'm going to sell a call. I don't think gold goes to 5,000. I think I just want to play that part of the distribution. I don't care about
The
buying the
financial
long-dated ball. I just want to
spider
cap it,
ETF.
okay? You get
Final trades on
You
CNBC.
get them, I'm not going to say for free, but almost for free. The upfront, the payoff in this thing can be 30 to 1. Okay, something along the lines of that. Now, does it mean gold is going to go to 3,000? Hard to say. Is there a chance that at some point during the process, the market says, oh, wait a second, I need to reprice the probability that gold goes to 3,000? Not that it go, but it can go, and it's not 3% anymore, it's 20%. Then you've basically made 7x your money. I'm very simplistic here, please, but just to understand what the philosophy should be around thinking around this event. So now we're discussing whether that tail is worth 3%, and we think it's probably worth a little bit more than 3%. So it's probability times the magnitude of the move. And here we think the probability of the Bollinger Distribution is fairly priced. The probability of that type of magnitude move, so the tail specific part of the distribution, less so, we might well argue.
Absolutely. Well, let me just add a little bit of a word of caution, as I should do, of course, and we're not here to give people investment advice, and they need to look into all of these things and risks themselves, but very good sometimes to visualize the things that we actually discuss, so I appreciate that. I think I'm going to leave it there. Hopefully, I assume we will have you back and continue our long-standing conversations, Alf, because it's always tremendous to have you on and hear your thoughts. And of course, to have this back and forth between you and Jem is always incredibly insightful. Of course, as always, people should go and follow you as well as Jem, because you have some wonderful insights. And since we are living in a truly global macro-driven world, it's really important to stay as well informed as possible. From Jem and me, thanks so much for listening. We look forward to being back as we continue our Global Macro series. And in the meantime, as usual, take care of yourself and take care of each other.
Thanks for listening to Top Traders Unplugged. If you feel you learned something of value from today's episode, the best way to stay updated is to go on over to iTunes and subscribe to the show so that you'll be sure to get all the new episodes as they're released. We have some amazing guests lined up for you, and to ensure our show continues to grow, please leave us an honest rating and review in iTunes. It only takes a minute, and it's the best way to show us you love the podcast. We'll see you next time on Top Traders Unplugged.
how the yield curve looks, the strength in the 2s versus the weakness in the 10s and 30s, that's reversing, of
last
course.
week as well.
And the VIX. The VIX yesterday closed at the highest level since April. And if you look at a chart, as you should be looking at, we had October high, April high, and a lower high yesterday, but still relatively firm. Let's go talk to a trader. Chem.
Hey, Rick.
Kelly has a simple question for you. What's changed? Why did yesterday look so explosive? The VIX been hibernating like rip fan volatility, and then all of a sudden today it's like yesterday didn't happen. Tell us what you're thinking.
There's a lot of really important things going on with dispersion under the hood. This rotation that we've seen away from tech into the Russell in particular has been driven by the vol complex. There's a ton of vol supplied on the index level, the S&P 500 specifically. That's pinning relatively to the rest of the market, the index. What that means is that certain things, as they move in one direction, tech in this current situation, means something has to go in the opposite direction. That, paired with all the calls that have been bought in the Russell prior to this, has led to a massive squeeze in the Russell relative to the tech. The problem is it's not an equal reaction on both sides. Everybody's piled into those AI names. It got really heavy, and now when you get a painful rotation like this, which could go on for a while, by the way, it can really hurt the indexes writ large. Paired with that, the index vol is vulnerable. Like it's offered well in the time being, but out in September, out in November with the election, there's a lot of lack of vol supply. So if this starts to keep going like this, eventually the index will unpin as well. So don't forget, vol is at the center of this decline. The AI move, in our opinion, is not over. And the Russell move could continue to go the opposite way. So that rotation could be very painful for some time.
You know, it seems like everything in life these days is a Rorschach. I'm sorry, but I see that the anecdotal evidence of weakening in the economy doesn't present a much stronger case today than it did a month ago or a month before that. Your thoughts?
Well, it's so much about money supply, right? And the Fed says they don't target the markets. But the reality is the markets are money supply. The wealth effect is real. It's bigger than people realize. When the market goes up, the GDP turns out better than expected. But what happens when the market goes down, right? The market doesn't lead the economy in the sense that it sees in the future. It actually leads the economy in the sense that it is money supply and drives a lot of output in the economy.
And on the inflation numbers, everybody was celebrating today. The pricing index came in below expectations and below last month. On the core, it was higher than expectations below last month, and both indicators were lower in December. Your final thoughts?
Well, I think the stagflationary world is here. It's what we've been talking about again and again. The structural core inflation numbers keep coming in a little bit hotter, while cyclically we're
Sell my
slowing.
swing.
And if this market comes down, the cyclical slowing will continue. So I think that's what you got to be aware of.
And the slowing glide path is like from New York to California, it seems. Chem, always a pleasure to talk to you. Kelly, back to you.
Great stuff, gentlemen. Thank you so much. Curious to hear your...
EBK company's CEO and president gave notice of intention to retire in early 2025. That's PEBK.
All right, let's start up JPAL Bingo. Let's get this up and running. Let's create the cards, shall we? SERV about to go high a day. All right. Grid 5x5. Include free space. All right. Transitory. Give me some words. Give me some words. And I want single words. I think that's the easiest. Unless it's a two-worder, like data dependent. That kind of goes together. I'll take it. If it makes sense. Data dependent. I spelled that wrong. All right. Cut. Ease. Inflation. Sticky. I like that. Tightening. Oh, am I getting filled here? Somehow I got filled. The order didn't even get up there. That's what happened last time. All right, 72, 71. I got those still sitting there. Okay. All right, back to bingo. Projections, got it. Projections. Landing, yep. September. Okay. Purple tie. Ooh, the tie color. That could really dick you, though, you know? Resilient. Do I have election? I don't think I have election. Yeah, I do. I have election. COVID. Okay, yeah, you could say that. Unemployment. Do you like new jeans? Here we go. It's trying. Hang on a second. I have trade here. It's weird that the 1269 level broke, but the real level was 1270. Looks like I have 2,000 shares and then another 1,000. If this breaks and then all right, that's what I'm going to do. I'm going to give it 2 cents because this 1 cent stuff fills me for some reason sometimes. All right, back to it. Hang on. All right, unemployment. Ukraine, that would be a good one. GDP, okay. Global, sure. Middle class, yep. War, sure. Target rate. Nice. Bell curve, yep. OnlyFans, yep, sure. We haven't even got enough 25 yet. Nominal, okay. Yep. Trump? That'd be weird for him to say. No. Let's just do president. President. 2%. I like it. I'll put in 3% as well. No, let's go 2%. Do we have transitory? Yeah, we do. Of course we do. Inversion. Yep. Inversion. Bonds. Markets. Yield. Yeah, yield. I'll put in yield. Cocaine. Yeah. Tech. Why would he say tech? All right, tech, guidance, rotation, ooh, dot, plot, Yellen, he might say her name. Ooh, colleagues, yep. Transition. The word the. Discord is letting Xbox console users view a live stream and start direct calls. Xbox friend list will now also include Discord friends, among other updates. It's Wednesday. CNSP right back down. CRWD rebounded the entire drop. Tightening. Surprised I don't have that already. Oh, I do have it already. All right, I'll just put employment. That'll include anything and everything employment. How about price stability? Stability. Dual mandate. Yes, now we're talking. Wage. Supercalifragilisticexpialidocious. I mean that one. CNSP. Dumping. Core inflation. How about just inflation? Do we should have inflation, right? We're like dumb if we don't. I just want inflation. That'll cover all of it. All right. 2 rate hikes. Putting that in there. No, just rate hikes. That'll include 2. Rate hikes. Just do hike or cut. All right. Oh, that's what I meant. Not hike, but cut. Rate cut. I said hike. Booba. Nice. How you doing? Any stocks today? Faye's first time chatter. We're red like $500 right now. It's kind of a shitty morning for me, but KOSS trying to move. Sweater puppies. How about touches his glasses? Touches his glasses. touches his tie.
I'll take McDonald's MCD. Sure seeing an increase of activity. Headline: McDonald's says $5 meal deal is meeting the goal it set out. No ticker Wendy's. Notable selling activity on that headline.
Meeting the goals it set out.
MCD McDonald's says it's capturing diners from rivals on deal. Comments to franchisees in a memo viewed by Bloomberg. McDonald's says $5 meal deal is meeting the goals
Coughs.
set out.
Okay,
That's
we'll do
Michael
just
Charlie
cough,
Delta.
cough.
McDonald's. Shares of McDonald's getting a pop here.
Tie color. See, that's the thing. Like, I don't want to do tie color because there's possibilities that it's not it, and you're like completely screwed, right?
Shares of Wendy's dropping to $16.97 at the lows.
We got a lot, I think. There's got to be something that we're missing. All right, I got transitory, data-dependent cut, ease, inflation, sticky, tightening, election, projections, landing, September, resilient, COVID, unemployment, Ukraine, GDP, global, middle-class war, target rate, bell curve, nominal president, 2%, inversion, bonds, markets, yield, guidance, rotation, dot plot, Yellen, colleagues, employment, price ability, dual mandate, wage, rate cuts, touches glasses, touches his tie, coughs. What about diversity and inclusion? Let's do diversity. He's mentioned that stuff before when he gets questions. Diversity, inclusion, well capitalized. The banks, yes. Resilient. Did we do banks? I don't think we did banks. Banks. Yes. Your butts. Well capitalized. Immigration. Yes. Immigration. We got 2%. Well, there's got to be all right, we got a lot. Yeah, it randomizes. I mean, we only get up to like 75 cards, so there will be doubles. Let me copy this in case it gets screwed up. Oh, I have resilient. Apparently, I already had resilient. Oh, this is the one that makes you pay? Only 30 cards for free. Oh, so we're going to have a bunch of we're going to have a bunch of doubles. It'll just be the first one that gets it. All right, here's your link. Oops. There you go. Get your bingo card. Get your bingo card. And it should open up a link and you'll be able to click your bingo card and whatever. When you win, you call bingo. You have to post in Discord in general chat. I have a list of the words. I will be marking them. Oh, I had a list of the words, but I dick that up. There's the list. Jeez, our list is huge. CMCSA comp. It's good when it moves, man. That's for sure. NUWE, nice little break. SCRV, nice move to high day. Damn. No, I don't trust you. You kidding me? I mean, the girls I trust. The dudes, no, they're freaking liars. So you basically, you and Cater. No, we don't all have the same card. There's only 30 different cards. So basically, there's a lot of duplicates. It'll just be the first one. It'll be the first person that gets it. It's hard. It's hard because he's saying stuff left and right. Boom, 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 boom. Serve, pushing 18. Damn. You say bingo here, but posting it is more important in Discord. And by the way, the winner gets nothing. So congratulations. And by the way, we also missed this entire move on serve. First a post in Discord. That's what I'll be looking for. Screenshot and post. And then we will review. We want merch. I could give you a discount, I think. So bingo is relevant. Yes, but it's also the most important thing. When does it start? It's the presser. So the 2:30 presser, 1 hour from now. We'll get the rate decision at 2 o'clock. And, you know, the typed up garbage. And then the presser. That's what we're going to be. When he gets in front of the podium and starts talking, that's the one. If I win, could you say, congratulations, son, I love you? Sure, user 000127255. Draw a penis on my face. Let me think about that one. I'm not a bot. Oh, you right. This pressing here again. QXO 1270, same setup. LSH? No. No. Serve big dumpy dump. Everybody has free space. A quick way to do it if you don't know how to screenshot is, yeah, with a Windows snipping tool. Every Windows has it. Or you can just push print screen. Make sure you don't have anything sus on your screen at the time, because it will take your main monitor and anything on it will be screenshotted. And you just Control V into Discord. So be sure your boobas are covered. She's oh. Oh, try it again. By the way, if you've been living under a rock and you're not in Discord, I posted this last week. But we have been selected for the front page of Twitch on August 29th. They don't give me a time. So it's usually a 1 hour thing. So mods, you're going to earn your pay that day, baby. Don't get canceled until that. Yeah. I just hope I have a green day. There's nothing worse than being on the front page and you have a red day. Ass and some feet. And left and you got band darks? I don't see you on the band list. Will I be dressing up? Should I? I don't know. We'll see how I'm feeling. See how the day's going. Baba, what are we scalping? Jeez, look at them go after this. Look at him go after this. He just went up there and then they're like, kill him. Had more money than the account. No, what I'll do is I'll just have my margin size up there, right? That's what people look at anyway. They don't even see this window for some reason. For some reason, this dollar amount does not get people's attention like this window. Maybe it's because you see me and then you see that number right there. And everybody's like, oh my gosh, $200,000. You trade with that much? Yeah, I'm a baller. Shot caller, brawler. BBLG ripping here. Holy smokes, and got smacked. This looks like some news volume. There's got to be something here. QXO dumpy. Let's see if that comes back up. Dip and rip potential here on QXO.
SGMO, Sangamo Therapeutics getting a pop here. Sandy Golf, Michael Oscar, SGMO.
Darks, did you get banned? Did you do something to get banned? That link a lot of times doesn't work for some reason. Here, this is another link. Here, try that link. That's a fresh one. Turn my arrow.
U.S. State Department says Americans should avoid northern Israel area near Syria, cites rising Israel-Hezbollah tensions.
Crap. I've got to go and pick up my van. It's getting detailed. The freaking guy didn't tell me he's leaving to go out of town tomorrow. All right, I'm going to go now so I can be back for the presser. And more importantly, J-Pal Bingo. Frickin' A. That would have been nice to know, bud! All right, I got to go catch an Uber. I'll be back for J-Pal Bingo, though.
Shares of Micron Technology pulling back a bit after a report that the U.S. is weighing new restrictions on China's access to AI memory chips. SK Hynix and Samsung could be affected by a rule planned by U.S. That's from Bloomberg. Coming up in 7 minutes, the Fed rate decision.
Stock G Stock JDUDE Stock G.
EDR. Endeavor, U.S. judge rejects $335 million UFC class action settlement over fighter pay. That is Echo Delta Romeo. DIS, Disney plans a new round of job cuts in its television division. That's Delta India Sandy. From Bloomberg. S&P futures are right now up 87, 55, 58, 75 ahead of the Fed decision. 1 minute to the Fed rate decision. Fed leaves key overnight interest rate unchanged at 5.25 to 5.5%. Now says inflation remains somewhat elevated. Fed says it's attentive to risks on both sides of the dual mandate, a change from June when it said it was highly attentive to inflation risks. Fed said in recent months there has been some further progress to a 2% inflation goal. In June, it said there had been modest further progress. It says risks to achieving employment and inflation goals continue to move into better balance, a change from June's toward better balance description. Fed says economy continues to expand at a solid pace. Job gains have moderated. Unemployment rate has moved up but remains low. Fed does not expect it will be appropriate to lower rates until it has gained greater confidence in moving substantially toward 2%. The decision was unanimous. The S&P futures are moving a bit lower now. S&P futures right now, 55, 52.75, moving slightly lower, getting a little bounce here. Again, the Fed says it does not expect it will be appropriate to lower rates until it has gained greater confidence that inflation is moving sustainably toward 2%. Short-term treasuries erased gains after the FOMC statement. Coming up at 2:30, the Fed press conference with Chairman Powell. ACHV, Achieve Life Science. Ladenburg reiterates their buy rating and $30 price target. Achieve Life Sciences, ACHV, Ladenburg reiterating their buy rating and $30 price targets. Alpha Charlie Hotel Victor. Donald Trump mocks Kamala Harris over racial identity, saying she is Indian or is she Indian or is she black? Said my message is to stop people from invading my country. Coming up, Fed Chair Powell about to speak.
Did I miss it? What time is it? Oh, 1 minute. All right, give me the link. Come on. J Pound Bingo. Let's go. Give me the link. What timing? What freaking timing? Hot damn, I'm good. Put your headset on, SJ. Remember, if you get the oh, look at the timing. Whoa! Where'd everything go? Oh, it's back. Okay.
Fed Chair Powell now beginning his press conference.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments.
Call him out if you hear what some of the ones we put in
Recent
there.
indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic. Strong, but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer run goal of 2%.
2%.
Total PCE prices rose 2.5% over the 12 months ending in June.
You need
Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks.
No sticky.
As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals.
Price stability.
If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate.
How did we not have
If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to
did say
achieving
target rate,
maximum
right?
employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Employment. I bet you do look forward to these questions.
Gina Smilik from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage.
Now, the words only count if Jay Powell says it, not the chicks or the dudes in the whatever, the reporters. Just Jay Powell.
So, on September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of
September
committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
He said policy rate. He hasn't said target rate.
So
he coughed. That was a cough.
A bit. If inflation behaves as you expect,
count it
between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut, and maybe that it wouldn't be appropriate to cut. So,
cut.
If we
You said
were
cut.
to see, for example, inflation moving down quickly, or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier, and we were to see higher readings,
they're sticky,
disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be
post in
inflation
Discord,
data,
Vega.
the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on
I'll take
shelter, on
stickiness. He
services,
said
et cetera,
sticky.
in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across.
We're still going. He
all
still
three
hasn't posted
categories
yet. It's on
of
trading
core
floor. But in
consumer
general, that's the
inflation.
rule.
That's
I'm not looking at
goods,
trading
housing
floor.
Services and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more.
Dual
and
mandate,
gain
2% free
confidence. And as I said,
inflation.
we have
You've got the
gain confidence,
easiest
and
freaking
more good data
bingo
would cause
ever,
us to
minus sticky.
gain more confidence.
Colby. Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%.
I mean,
since we're now at that level,
do we
in
count
terms of
sticky? He
inflation
said
and
stickiness.
already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
Count it.
So I would just
All right,
say,
we count it. Cater says we count it. Mod
really
says
the
we
path
count
ahead
it.
is
All
going
right.
to depend on the way the
Stickiness it
economy,
is. Congratulations,
evolves.
Vega.
And I can't really give you any better forward guidance on it than
You
that.
heard
we
sticky?
didn't, of course, do an SEP at this meeting. We will do another.
Damn,
one
that
at
was
the
an
September
easy
meeting.
bingo. You
I
got
would
like
just say
4
I can
or 3
imagine a
easy ones
scenario
and a
in which
free space.
there would
Sticky was going to be the tough one. I
everywhere
can't
from
believe
0
it.
cuts to several cuts, depending on the way the economy evolves.
Congratulations,
And,
Vega.
I
You
wouldn't
win
wanna
nothing.
Lay out a baseline path for you there today. I've said what I can say about September and about today, though.
John, they had that. So technically, like, up to 10 of you could have had that card.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until
How do you
inflation
play
got
bingo?
to 2% to cut rates because of how inflation
The
has
link,
lagged.
Jimmy John,
Does
the
that
link.
apply for the labor market?
I supplied
too?
the
If
link
labor market,
above.
Is back in equilibrium. Why is restrictive policy and potentially
Halo.
very restrictive policy, given the high real funds rate, warranted right now?
Yeah, that's Nick T. When he talks, you listen.
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions, and that's what we want to see. We've seen that over a period of a couple of years.
OX,
and a move really
or
from
QXO,
overheated conditions
testing
to more normal
1270. It
conditions.
broke through
We are
1269.
watching the labor market conditions quite closely, and that's what we're seeing. If we start
seller
to
at
see something that
1271
looks to be
now.
more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past, you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our three. We have 2 mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those
Shit
2
going
things
up. Oh,
equally
damn,
under the
things
law.
are ripping right
when
now.
we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be, a
10-year
single,
yields
a
to
good
dropping.
single statistic, but we'd be looking at wages, we'd be looking at participation, we'd
The
be
market-
looking at all the
oh,
things,
the math.
surveys, quits, hires, all of those things to determine the overall status
the market
of the
is
labor market.
pricing
But we're
in a
looking
September
at it
cut right
now.
now.
I would say again,
Fully,
I think
I would say.
you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a sustainable path down to 2%. So
Is
those
the volume
two
good?
things are working together, and we're factoring those both into our policy.
Chris. Chris Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts to prevent if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of, I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates, and I think this is how we balance them. It's a rough balance, but it does feel like that. Again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low, and we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low, so it painted a picture of a very static labor market. Is that sustainable in your view, or something that is worrying? Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as
SPY having a 2%
decline
day.
in job openings.
Holy crap.
That was good. Today's ECI reading was a little softer than expected, so that's a good reading. It shows that wage increases are still at a strong level, but that level continues.
Who was that
to
guy
come
that was
down
thinking
to
about
more
selling his
sustainable levels
entire
over time?
portfolio
That's
yesterday?
exactly the pattern that we want to be seeing. So I think the data
we
we've
put
been
out
seeing in the labor market are broadly consistent with that normalization process.
A reason maybe not
Ticker Solar at SCDG starts seeing a spike in activity, new high. So San Diego Delta Golf.
Solar might be doing really well right now.
Steve Leisman, CNBC. Mr. Chairman, back in March, you talked about cutting rates as a process, and in June, you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut? Or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen, significant movement in the labor market. And, we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this, we raised rates a year ago at the July meeting. And if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market, I think, unemployment was in the threes, mid threes. So it's a different economy, and I think it's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we have, we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate. And I think we're just as part of a process. In terms of what that looks like, I think most rate, you would think in a base case that policy rates would move down from here, but I don't want to try to give specific forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy, and that's highly uncertain.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of
renewable stocks starting to run? They do good in a rate dropping environment.
In between.
Right now, VSTE hitting the scanners.
On track at this point in the year.
Let's think of some
Actually,
solar
what we're
plays
seeing
or
is a little
whatever.
better than what we saw last year.
Low
Last
flow.
year, as we pointed out late in the year, a whole lot of the progress we saw last year was from goods prices, which were going down at an unsustainable rate, disinflating at an unsustainable rate. This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is,
let's get some tickers.
You got 1/4 of that. We had
Let's
7
get some
months
tickers out.
of low inflation. You got 1/4 of this. I would say the quality of this is higher, and it's good, but so far it's only.
I'm not talking FSLR.
We need to see more to know that we're, to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report, and frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And
am I ready for some cashews? Am I finally going to get these freaking delicious cashews you've been telling me about?
The first couple of months
These
of the
nuts.
year,
I want your nuts in my mouth.
Seabus
Pizza.
They were these blips that could have actually.
I want your delicious nuts in my mouth,
were some of the projections
so I can taste them.
So the thing about if what it is seasonality, and it could just be, it's very, very hard to to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're underreporting too low inflation. If you smoothed it out, it's a zero-sum game.
But the solar-related stocks shares seeing continued heavy activity.
All that out, all those effects out. 12-month now is 2.5% headline,
as soon as I
2.6% core.
Get it at the
so much better than where we were
place
even a year ago.
Receives my mail. They forward it to me.
The job is not done. I want to stress that, and we're committed to getting inflation sustainably under 2%. But we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
We need low flow.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices? Or is it more important for the American people that you keep rates where they are to bring inflation down?
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right? And so in our, quasi-constitutional document, the Statement on Longer Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away, and you take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks to inflation have decreased as the labor market has cooled off, and labor market has softened, probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are
extra
real.
large.
So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year, and the time is coming, as other central banks around the world are facing the same question. The time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our business. So we get a lot of data between now and September, and it isn't going to be one data read or even two. It's going to be the totality of the data, all of the data, and not just and then how is that affecting the outlook and how is it affecting the balance of risks? That's going to be the assessment that we do. Of course, we'll all look carefully at the employment report, but so much other data coming in, and so much happening between now and the September meeting, and we'll make a judgment.
Edward. Thank you, Mr. Chairman. Edward Lawrence of Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Yeah, we got to.
We'll look at everything.
We got to.
We've seen some
see how these go.
Tendency to
they've got to get
have a
momentum.
narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So
Nvidia's insane.
13% day. We look at the whole thing, and
13%
do
day.
look at private demand extra carefully. To your point about government. So we'll just be looking at all those things.
So as a follow then, so could the Fed then be behind the curve? Because you said some of the reports, last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got another quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today, we did have we had a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving at this meeting. That was the strong sense of the committee. But it's a conversation that we had today, certainly.
Courtney.
Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at inflation, rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down. It should take some time to get into the full economy, affect financial conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that. Just to make it clear, it's a very difficult, challenging judgment, and we don't want to go too soon. We don't want to go too late. But this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. Labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing a normalization there. But wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Victoria. Hi, Victoria Guida with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the Sahm rule? And would that potentially affect how quickly you cut rates?
How was that?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical.
It was thrown off guard on that one,
statistical thing that has happened through history. A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So again, what do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So again, I've been through some of the data already, but what we think we're seeing is a normalizing labor market. And we're watching carefully to
LSH has a
see
340
if
level.
it turns out
I don't
to
know
be
if it
more,
does
starts
anything,
to show
but
signs that it's more than
it's
that,
there.
then we're well positioned to respond.
Is there reason to think that the labor market might behave differently this time than it has historically?
I think, history doesn't repeat itself. It rhymes. I think that statement is very true about the economy. You never assume it's going to be just the same. An example would be, is there a trend increase in the level of vacancies? There are many, many examples, so it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many pieces of received wisdom just haven't worked, and it's because the situation really is unusual or unique in that so much of this inflation came from the shutdown in the economy and the resulting supply problems in the face of, admittedly, very strong demand. So the whole situation is not the same as many of the other prior inflation
I'll take SPWR, Sydney Papa Whiskey Romeo, shares see notable activity, new highs, SPWR.
To be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
Amara.
Thank you, Chair Powell. I'm Mara Mokwe with Bloomberg. There seems to be quite a difference between what the anecdotal data are telling us, such as the very recent downbeat beige book, and the hard data. Do you take those anecdotes seriously? That is, that the economy and labor market are cooling much more rapidly than what's shown in the data?
So I do take that seriously, and the beige book is great. What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses, business leaders, and workers, and
just
people in our private sector in their districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or a really bad economy. It's one of there are spots of weakness, and there are regions where growth is stronger than other regions. But overall, it's again look at the aggregate data. Aggregate data is particularly PDFP, private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it does. I think it's important to listen to anecdotal data and not just look at the aggregate data, especially it's very hard.
5-minute play on FSLR.
Quarter to quarter. So it's just hard to measure economic activity. There are a lot of. It's just difficult to do. So I look at both. Yeah, but I wouldn't say that the anecdotal data is uniformly downbeat. It's more mixed.
Thank you. Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
I absolutely do, and I think it's, first of all, we haven't made any decisions. I would say it this way. Haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation, again, is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be. You know, we're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators who bless us with their commentary, but we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician, or any political outcome. The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So anything that we do before, during, or after the election will be based on the data, the outlook, and the balance of risks, and not on anything else.
Just a quick follow-up. Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No, we do not do that. We absolutely do not do that. We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. You know, we basically, we have our forecast. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. You know, we're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
Nicholas.
Thank you, Chair Powell. Nicholas Jasinski from Barron's Magazine. There hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences. There are, and you know, we talk a lot before, during, and after the meeting. We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. You know, no one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents. We haven't had so many during the pandemic era, and it just may be that we felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
Jean.
Hello, Jean Young with MNI Market News.
Is a 50 basis point cut as a first cut at all likely or even on the table? Thank you.
Damn.
You know, I don't want to say.
Ain't no
I don't wanna be
way.
really specific about what we're going to do, but that's not something we're thinking about right now.
Way to waste your question.
Jennifer.
Of course, I haven't made any decisions at all.
I'll have it.
As of
I'll
today.
have Brad with it.
Thank you, Chair Bell. Jennifer
didn't
Schonberger
trade
with Yahoo
much. I
Finance.
traded the one
Not
time.
to get ahead of the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
Well, so, you know, the way the meeting is set up, the first day, there's a discussion of financial stability because it's every other meeting we have that. And then we have an opportunity to comment on that. Then we have an economic go-around. And then this morning, we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this. And there, you know, there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy. And so, in the minutes, we'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and you know. But I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome.
LSH
not just the
broke.
voters, but everyone. So
At 40 level.
I would also say
43.
some people examine the possibility, the case for moving at this meeting, but overwhelmingly, the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question, that is the case. That, as I mentioned, we think that the time it's approaching, and if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk."
The hell was that?
Is he wrong?
So this is the judgment that we have to make, and we're well aware of the judgment.
What is that?
We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more.
Was that
Then we saw
on
some
the
higher
stream?
inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move
what
quite a
that was.
bit. And as I mentioned, I don't think it needs to,
was it DOS?
cool
Does
off
DOS make
anymore
sounds?
for us to get
do
the
have it up.
inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that that time is drawing near. That time could be in September. If
I don't know what that noise is.
If the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off.
Okay, which one of you dickweeds are
nonetheless,
doing something I don't know what you're doing?
Unemployment is low. The data overall show a strong labor market. So that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see, which way the economy heads, and I think if we are to respond to weakness, we're certainly, well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and, a good labor market and inflation coming down.
Exactly what they do, Benny.
Thank you so much. In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
Yeah, I mean,
this is tight here on CRWD.
I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we had to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And, you know, when you're saying you're going to be data-driven, of course, it's always what the
got a
data,
little wedge on it.
how they affect the outlook and the balance of risks. But
Keep an eye.
nobody has great vision deep into the future. In terms of a reaction function, that's a long time, you know, discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, you know, again, you've seen significant improvement in inflation just for the last quarter.
233
Markets
break.
move around on
Do
that, on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
Go to Jeff for the last question.
Thank you, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot. With Fed now being in the books for a little over a year, there hasn't been a whole lot of talk about central bank digital currency, and wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally. Instant payments, and you know, it's something that's going to really change the way it's going to make more efficient and hopefully safer, and all those things, the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed, because we play an important role in the payments sector, both as as a convener and as an operator too. In terms of a CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority.
Russell the Fourth, let's go, bud.
Keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, you know, the story and what's happening out there. You know, I think it's work that we need to be doing, which could be very beneficial down the road.
Wasn't that you?
But we don't have.
Who DMs me on TradingView? I didn't even know you could do that.
We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet. Thank you.
All right. It's high quality stock twits. Is there such thing as high quality stock twits? Oh. Oh, they pushed it down. Oh, they pushed it down. LSH breaking my levels here. Video taking a little poopy, a little break, a little poopy break. Starting to juice here, boys. And girl. Look at the buys. Jeez. Yeah, VIX did pop up there. It's kind of weird. SCRV right back to the highs. LSH, trying it. All right, I'm calling it here. I'm red on the day, but you know what? It's not terrible. $500. I can live with that. Great month. I'll take it. I got a few things I got to pack up here. Some eBay stuff. So I'll be around in Discord. Like I said, not a terrible day. I made $450 yesterday, so basically break even over the last 2 days. I've made $50 this week so far. Fantastic. Tomorrow should be fun though. After the market has 12 hours to digest what the hell is going on here. How'd I do in the month? I think it was my best month of the year. I'm looking real quick. Oh, hurry up. July, $5,600. So percentage-wise, it's fantastic. Not my best month, but decent month. Anyway, we'll be back at it tomorrow. See you bright and early. I expect some movements. Peace out, everybody.